Good afternoon, everyone. Welcome to the final session of this year's FinTech Week Vienna 2021, and also one of the final events of this week of the Vienna Up 21. My name is Clemens Wassner from AI Austria, the non-profit that is among the organizers of the Applied AI Conference. And with me, I welcome Matthias Grabner, who has been doing the Applied AI conferences with me together since 2018. So maybe you want to speak a couple of words, Matthias?
Well, hello, everybody, and thanks for being with us today again in this special edition of Applied AI Conference. It's been 3 years since we do these kind of conferences, and 1 year since we are only coming to you, and since you are only meeting amongst each other in the virtual space, which has also a good side. We are now able to meet on more specific topics. And well, even though the topic of FinTech and AI is very large, and thus I'm very happy that we are able to be part of this Vienna Up Tech Festival that is going on these weeks here in Vienna and online, and to contribute with our AAIC community. Thanks for organizing this, Clemens, and great being here. Great to see so many Austrian companies joining in as well.
Yeah, thank you very much. So next I would like to hand over the word to Mr. FinTech Austria, basically patient zero when it comes to FinTech. So Mr. Patrick Böschel. So Patrick, hello.
Hi everybody. Thanks Clemens for giving me the opportunity to just say a few words also about the FinTech Week itself and what we do at FinTech Austria. We are also a non-profit organization trying to lobby for the ecosystem, to foster cooperations, and to move the whole topic of FinTech forward. It was a great pleasure to host the FinTech Week Vienna this time, already for the 4th time, and as part of Vienna Up. Just to give you a couple of numbers, the idea of FinTech Week is always to provide a platform to have independent organizers such as you, Clemens, with AI Austria, contribute via events, and we are also doing a couple of our own events. This year we had in some 30 partners who organized 11 events. Initiated was the week originally by FinTech Austria, as well as the Austrian Bankers Association. And specifically this year, also last year, we had support from the Vienna Business Agency. So shout out to those guys, and thank you very much for your help with that. This year, we had 1,750 registrations and even more viewers. So some links might have been shared, etc. The viewer count, excluding this event, is roughly 2,000. So I hope, Clemens, that we will pump up these numbers with this event further. Thanks for your contribution as well. And if you want to speak FinTech, then just reach out.
Yeah, Patrick, thank you very much. So without further hesitation, let me introduce you our first speaker of today, Mr. Alexander Fleiss, tuning in from New York. Hi, Alex.
Hey, Clemens, thank you for having me on today.
So, I mean, maybe a little bit of background. Me and Alex know each other since quite some time via LinkedIn. So you could basically say we are LinkedIn relatives. Alex is like one of the first people to apply machine learning in FinTech. You can find articles going back over 10 years already covering this. And most recently, besides his company, he also launched Rebellion TV, which you will surely also tell us more about it. So I will hand over the stage to you. Once you're finished, we will take questions from the audience. So the stage is yours.
Thank you so much, Clemens. Rebellion Research originated as a, group mathematical project out of Amherst College, a small elite school in the US. actually harder to get into than Yale, though not very well known outside of the US. And we got about $250,000 of funding from the college. And we first used k-means clustering. It was myself, the chair of the math department, and who became our chief science officer. And with k-means clustering, we found we could make short-term predictions, but we wanted to actually make a machine learning investor. Now, this was back in 2003, 2004, when machine learning was still not respected. It was people just thought Terminator, kind of joked at it. Now machine learning is the tool of tools. So for me to have lived the last 20 years and watched machine learning go from, quite frankly, a joke in many academic circles to being innovation, the #1 investment goal for Apple, Google, Microsoft, look around at where they're putting their money. And it's the acquisition of smarter machine learning systems and better data. And of course, in the end, it's all about data. Data is the oil that drives machine learning. And without good data, your machine learning is worthless. Let's just think back to Les Miserables and the master of the house and his sausage machine. Very simply, machine learning is the sausage machine, and data is the animal stuff that goes into the sausage machine. It's not more complicated than that, though many people will try and hype it to be. You're very simply trying to come out with a product from data that you don't have a product from. It's a way of finding an intelligent pattern. It's pattern seeking at the end of the day. That's all it is. And now I've started teaching at Cornell for the last 3 years, an AI class. And this fall I'll be teaching a class on using AI for natural language processing. And natural language processing is the branch of machine learning I am most excited about right now on the planet. And before I get into Rebellion research, I want to talk about natural language processing because I urge everyone to study it. Very simply speaking, it's the ability for computers to disseminate human communication. It's unlocking such a gigantic pool of data that we haven't even begun to touch. I have started working on a research project with the United States Air Force and the United States Space Force. So Rebellion Research, we are a think tank with over 200 members. Our think tank includes admirals, many professors, 4 different directors of schools, including Yale School of Accounting, Berkeley School of Business, Columbia School of Math, and Cornell School of Engineering. So we are very academically stacked, and so we do all of this research. And with the Space Force, we're using deep learning to try and map space. So that's really fun. But reverting back to the Air Force, the Air Force CTO and I estimate that probably 90 to 95% of the Air Force's data has not been touched. And that's the data before we get to natural language processing. The amount of communication data that has occurred in the Air Force that's still logged over the last 20 to 30 years is unbelievable. If you actually add the amount of communication data to actual data that's in Excel, I'd say the Air Force has tapped maybe 1% of 1% of their available data. And so that gives you an idea of what natural language processing can unlock. It can unlock real-time intuition. It can unlock economic, financial, market patterns that are just previously unseen. They can disseminate intelligent chatter from stupid chatter. Maybe bad traders all want to go here, so that's the area we don't want to go to. So Rebellion Research was formed out of Amherst College, and we were doing k-means clustering. And k-means clustering is great for framing a problem and trying to figure out how to go about that hike. But that's good for the bottom of the mountain. Okay. And moving up the mountain, I realized, and my partner, Jeremy Newton, and Jeremy Newton actually left Rebellion to go and be the head of machine learning for Peter Thiel. And Peter Thiel was one of the co-founders, not a co-founder, but he was one of the seed investors of Facebook. Facebook's a sore subject for me because I'm good friends with both the Winklevi twins and Divya Narendra. Actually, was on the phone with Divya for maybe 2 hours yesterday chatting about stuff. I was similar years at Amherst and Harvard and had a lot of friends there. And so I just what Mark Zuckerberg did essentially was work for these people and take their idea and take their code. And nevertheless, let's not delve into Facebook, the social network. But the social network is a wonderful movie, and I urge anyone who has not seen it to see it. It's quite accurate. And just so everyone knows, Zuckerberg has kind of actually apologized to both the Winklevi and Divya Narendra since, oddly enough, everyone has guilt. But so Rebellion Research in 2003, 2004 was using, at first we just research with funding from Amherst College. But, my partner Jeremy and I realized we needed machine learning. And Jeremy was good at machine learning, but he wasn't, great yet in 03, 04. And so we found one of my best friends who I'd gone to the National Math Championships with 2 years earlier, Spencer Greenberg. And actually, I had gotten further than Spencer. I got to the second round of the National Math Championship. Spencer was knocked out in the first round. But that's because I'm crafty. I'm not that smart. Spencer is far smarter than me, 70 to 80% smarter than me. That's not something I admit easily. Very high. I think of myself as Anyway, the point is that I knew I needed Spencer to build good machine learning. And Spencer was actually working for the NSA and the CIA, the intelligence agencies, developing machine learning for document search. And so they have all of these documents from the Middle East. They're looking for terrorists. And Spencer's machine learning would look for potential terrorists via connection to known terrorists. The idea being that his machine learning would identify unknown unknowns and then create these people into known unknowns. And so terrorist ABC is in the same apartment complex and is in the same football league, so significant correlations. And so I said to Spencer, I said, hey, we got all this funding from Amherst. We're trying to build an investment product based on quantitative methods using K-means clustering. I know we need machine learning because, K-means clustering just isn't strong enough. And I also know we need the ability to pivot. And so Spencer said, hey, I have built an app that uses, so Spencer's teacher and his advisor was, I'm sure everyone knows, everyone should know Jan LeCun. Jan LeCun is one of the godfathers of AI. He really pushed CNNs. His work on object detection is legendary. His work on detecting numbers on bank checks was the first. So, and we actually used a lot of his work even before he got famous in 2012 for his CNNs. We were using his CNNs in 03, 04, 05, 06 with Spencer, because Spencer's deep learning was made for a dating app. And so my partner Spencer had created a dating app that was going to use deep learning, facial recognition, to estimate how you were attracted to people. The idea being that his technology would figure out the ideal face for you. And so you would look at 100 faces, you would rate all the faces, and then the machine learning would decide, okay, your ideal face is this face. And his dating app never really got off the ground. But I said, Spencer, hey, we can take your deep learning system. And by the way, back in 03, 04, deep learning systems didn't grow on trees. Now they do. Deep learning systems grow on trees. They're everywhere. A 12-year-old in Myanmar can access deep learning, no problem, for free. So back in 03, Jeremy and I worked with Spencer to adapt his dating app's deep learning towards economic predictions. At first, we were miserable failures because the problem with deep learning is that it's like a missile launch, okay? There are a million factors that need to be right. It's very tender. It's specific. It can't pivot at all. I mean, God, missiles can't even launch in the winter or even in cold weather, as we saw with Challenger. They'll blow up. So there's no pivotability with deep learning, which will get me to later and to our pivot to reinforcement learning. But nevertheless, so in building our deep learning, we were incredible failures at first. We were using too much data, and we realized that the system, was stupid. It was brilliant, but if anyone's seen the movie with Tom Cruise and Dustin Hoffman can count cards and he can count toothpicks on the floor very quickly, but he has no social abilities. And so, machine learning can do something really well and everything else terribly. But you have to make sure, the idea being that you want a very general piece of advice. You want to do as much work as possible with any algorithm you're ever building or any idea you have. You want to take your theorem as far as you can before you bring machine learning in. You want to try to get 90% of the way before you get to machine learning. And so you can't just give machine learning and say, okay, figure it out for me. It can do an okay job, but it's not going to add alpha in the market. You have to give it a very specific area, and you have to spoon feed it the data. And so that's what we did. And so we spent a few years working on how to spoon feed the data. And so what we actually ended up developing was an economic digestion theory. How do you view the global economy? So our machine views global economy as a solar system. And thus so we were able to take this just tremendous amount of global economic data, and we were able to disperse it throughout the global economy. And so with Chile, our system knew ahead of time that copper is like 90% of Chile's output. And Comprehensive Servicio Unidas, owns 90% of Chile's beverage output, actually, all of their beer and soda. It's a monopoly that's allowed. And so, our AI knows ahead of time that Comprehensive Servicio Unidas is part of Chile. And so it doesn't have to figure that out, really. In fact, what it's, we're simplifying it. Instead, our AI will look at the Chilean planet as one prediction through an aggregate of all of the assets that we've placed in Chile. And so what happens is that we essentially take our AI's predictions and we work with them so that, instead of, at first we were putting in like 2,000 data bits and then 2,000 factors, literally 2,000 factors, each factor representing years and years worth of data. So it was just, and it was losing 20% a year. But then we realized we had to reduce the 2,000 to 30, 40, and then things would get a lot easier. And, that's really what we did. And the deep learning worked really well at first in 07, 08. And then with 08, the market crashed. Since the deep learning, as I said, is kind of slow, it doesn't pivot well. As early as April 07, the deep learning saw a gigantic economic issue happening. And so by, I think, mid-June 07, it was, real estate had an F rating. And by late 07, the AI was expecting a market crash in the next year. And by March of 08, it hit a fever pitch where it was expecting the market to lose half of its value. And so, yeah, the deep learning worked incredibly well for the 08 market crash because that was a very slow motion freight train. As opposed to today, look at the COVID crash. You had COVID coming out January, February, market crash beginning of March, late February, but then the recovery and now positive territory. Amazing speed. Because our world is much more global and interconnected, things happen quicker. They move through the cycle quicker. Okay. And so that gets me back to actually 2011. In 2011, our deep learning saw a very strong economy. And actually, we were working with Moody's. Moody's is a large ratings agency, and they actually offered to buy us because our machine learning was able to improve their ratings efficiency. But we didn't want to sell, we didn't want to go and work. So, my partner Spencer just pretty much goes around the world lecturing on, thinking and cynicism. So, and I just like to teach. So neither of us were really corporate types ever. It was just not our thing. And, as Shakespeare says in Othello, to thine own self be true. and it's very important. I'm not an IBMer, and so I like my own thing. And so we did not sell to Moody's. But what happened in 2011 was the S&P ratings agency, speaking of ratings agencies, actually, S&P downgraded the U.S. government debt. Now, this was the first time U.S. government debt had ever been downgraded. What you had was one of the most passionate market sell-offs in the history of the stock market. Now, it got us a nice write-up. This one, Institutional Investor. We came out in September during the market crash, and our AI said the market's going to have one of the biggest recoveries we've ever seen. And we told that to the editor of Institutional Investor, and then it happened. September of 2011 was the biggest jump in the S&P in 20 years. So they gave us a nice write-up for that. But we also got a nice write-up in the journal right over here. That was for the Greek debt crisis. The deep learning called it Greek debt crisis. Starting in September of 2009, the deep learning saw, and it was very easy. If you look at the data, obviously the Greece was going down the tubes. I mean, if you sit there and you're put in a room and you're only given Greek data relative to French, Swiss, Italian, it's like obviously. But back then, there was so much market exuberance. Everyone was so excited. Oh, the market crash is over. The Lehman, Bear Stearns bankruptcies are behind us. Green shoots everywhere, as Obama would say. And so all of this fund capital went towards Greece. And so there's a lot of money put towards Greece because Greece has always been an American investor's favorite because it's kind of emerging. It's kind of like a, third world economy, but it's Europe. So, hey, it's relatable. We know it, we can do it. Obviously it's not, one of Europe's trophy countries, but it's still part of Europe. And it's Greece, and we all love it in the summertime. So all of this American capital was thrown at Greece, really very stupid American capital, because Greece was absolutely falling apart in August, September. It was unbelievable. I mean, you see retail sales in France and Germany, and Greece is while Greece's PE ratio was higher. It made no sense whatsoever. So Greece did end up blowing up. We were very public about Greece blowing up for a while before it finally did. And so that was, it was sad that Greece blew up, but obviously fulfilling for us as an economic, we're not an economic ratings firm. We are money management, research, and now we have this educational TV we started. But, our economic forward ratings are, we do actually publish an economic report, which we sell to a few hedge funds, but we're really not, our economic ratings is not our primary business. So it is actually a small and important part of our business. And I guess from a pride point, it might be the most important part, because calling our economic movements is what sets our technology apart and what has set our company apart for the last 15 years, quite frankly. And building a machine learning for economic predictions was novel then, and it's still novel now. When the machine learning was profiled on the cover of the Wall Street Journal, the editor emailed us a few weeks later and said, listen, we had maybe 60 people come to us and say, hey, we use machine learning for investing. And the Wall Street Journal editorial staff followed up on all of them. And the longest holding period of any machine learning investor that contacted the journal back in 2010 was 2 weeks. And our holding periods go as long as 3 years. We're looking to make intelligent economic and investment bets that can hold a test of time. And so ideally, for instance, in 2009, when the economy was starting to recover, we saw steel prices were strengthening. We saw Brazil was doing very well. And so, sorry, it's my poodle in the background. Quiet. And so And so we found that Ternium, TX, was a perfect company. And not just did it make sense from an economic and an industrial standpoint, but it made sense from a fundamental standpoint. And fundamentals have become very, very important for our predictions. So we want P ratios relative to peers and cash flow ratios relative to peers that are favorable. And so there's basically 3 tranches now for how we value a prediction. And so that's for on the stock level. Of course, on a macro level, we can't do that with Japan. We can't do their balance sheet and income statement, but we can with Sony or Canon, for instance. But we really look to find strong economic pocket and strong industry, strong country. And I apologize. And that gets us to the reinforcement learning jump. And so in 2011, when the S&P did downgrade and the market did drop, our reinforcement learning, which we'd already been tinkering with for 2 years, finished the year up, and our deep learning finished the year down 10%, which was about, I think the international markets were down about 10%. And it's a global system. So, but obviously we don't want to do market. We want to beat the market. And seeing our reinforcement learning did so much better, we said, okay, now's the time to switch. And we switched. And some years the deep learning will beat the reinforcement learning, but on average, the reinforcement learning outperforms. And this was a gigantic fight I had with my partner, Spencer Greenberg, because he felt that we should stick with deep learning because we were a deep learning company. I said, that's absolutely insane. We're a company trying to build the best technology we can. We're not wed to deep learning versus reinforcement learning. The idea that we would not change our software because of some, connection we had with the type of technology, when clearly reinforcement learning works better with the stock market, you have to pivot quicker. And so, that is, what we did. Reinforcement learning is very much, think of it like chess. It's knowing when to give up a pawn to get a rook. And so it's much more concerned with short term. And so we use a deep reinforcement learning, which is really a variation of deep learning and reinforcement learning. So we use 25 years of historical data, but the most recent 2 years and 90 days will be much more heavily weighted. And we'll look at much more shorter term movements with much more, greater weight. So that gets me to the Bangladeshi butter phenomenon. It's absolutely one of my favorite stories. I think it was in 1992 the United Nations decided to figure out what data set was the most predictive for the global economy. So the UN thought that they could be the greatest quant fund of all time. And in the UN's infinite wisdom, they hired 50 great professors, and there was tons of funding. And what these researchers found was that the futures market, I don't remember if it was weekly or monthly, for Bangladeshi butter futures had a 97% correlation with predicting the S&P futures. And this is just like long-term capital management, except, that was a 10-year model that worked. And the long-term capital management, they had 47-year history. But with long-term capital management, they had a very simple model, terrible risk metrics. Long-term capital management at the end was short S&P banking sector in the U.S., long the Russian ruble, long Argentinian debt. So when those went against each other, they just, went to death very quickly. But there was no intelligence behind that. There was no intelligent reasoning. Why are you short the S&P banking sector? It's 1998 and the U.S. economy is expanding. Why are you long the Russian ruble? Oil's falling. Where's the, so I watched long-term capital management blow up. And I said to myself, this is why you need machine learning. You need to be cognizant of all relevant data. You can't just ignore the extremely correlated data set because you're focusing on the other data set. And so with Bangladeshi butter, from 1992 to then 2002, that 97% correlation dropped to like a 3% correlation. So, that's pretty ridiculous to see a 97% drop to 3%. But that's same with long-term capital management. Any model can look fantastic for a very long time. And that is why I was driven to machine learning, where you have less of a chance of overfitting. However, you can still very easily overfit with machine learning. No problem. Which is why I urge at the end of the day to have your theory, your thesis, what you want to achieve, have good evidence that you have some intelligence behind your theory, that it makes some sense. Then you want to bring in the machine learning big gun. find your aim, find your target, find your direction. Then you bring in the big gun. Okay. So I don't know how much time do I have? I thought it was half an hour. We're at 8:30.
Yes. We're just approaching at the end. So maybe.
Any questions then, or?
Yeah, I think. Let me also put Matthias inside. Okay, just a second.
Sorry about that. He usually behaves very well. I totally apologize. I don't know why he's barking today.
He's too excited. That's the problem. Once you mentioned reinforcement learning, I could feel it. The tension in the room.
He's probably sat through 100 classes and not bark. I apologize. Anyway, yeah, so let's get the questions.
So we received one question. Sometimes it feels that the stock market does not adhere to rules and logic. How can AI be used to predict developments nevertheless? Are learnings made by machines actually useful? Is there a constant set of rules and signs and patterns? Question mark.
Okay. Well, first of all, human beings are simple monkeys. We just do the same things over and over and over again. And so generally patterns are repeatable, and that's all the AI is looking for is patterns. And so if you're dealing with a bunch of irrationality, you're not wed to any one pattern. And so our AI, for instance, will have between 100 and 120 stocks, and our AI knows that it's wrong. So our AI is right about 63% of the time. And if you know you're going to be wrong 37% of the time, act accordingly. And so I think oil's going up, but if it isn't, I'll make investments on the other side of that. I think cigarettes are being legislated out of existence in the US, but I might be wrong. And so if I'm wrong, we'll buy this thing. The idea being that cognizant of failure allows you to have a very diversified portfolio. Our portfolio is, from an Egon value, more diversified than the S&P 500. And so it's really looking to make profits from a variety of areas. I'm sure everyone's seen this year that Cathie Wood's famous ARK stocks, all that technology stuff, is down maybe 10 to 20% across the board. And that's a gigantic portion of our portfolio, which has gotten annihilated. The amount of stocks that the Rebellion holds that are down 30 to 40% since February is absurd. However, the general AI Smart Index is up 9% this year, despite having 5, 10, 15 stocks that have gone from 160 to 100 since February. Which actually makes me very bullish for the next few months, because I think that we've had a gigantic high momentum tech sell-off since February for no good reason. The economy is going straight up, and our President Biden is putting even more money into the economy than President Trump. So with prices rising everywhere, prices will rise in the biggest market of all, which is the market. And so, prices will rise. That is what happens with inflation. Prices rise. And so generally most stocks will go up. You can't hold cash. I don't hold, despite being close to the wink of why, who pushed me to buy Bitcoin when it was 15. Yes, I missed Bitcoin at 15. But shit happens. And I don't feel comfortable putting my capital into an asset that it's just not how I work. But I also made a decision personally. I put all my money in the AI. I don't make investment decisions. I spend all my time doing research and development. I don't waste time trying to invest. I'm not an investor. I'm not good at investing. I'm good at a few things, and I focus on what I'm good at, which is what everyone should focus on in their life, what they're good at. Wasting time on things you're not good at is only going to bring down your confidence. And I was losing money on stupid stock plays because, it was fun. It was fun. No. This is your money. I'm a father. I don't have time for that. Maybe when you're young and you can play with money, but when you want to have a family and a wife and children, you can't be messing around, and you need to be serious about your investments. And so, that's why I personally don't buy anything outside of just the AI, just the AI long index. I keep my money in that. I've done that for 5 years now. I've been very happily with that. And I mean, personally, if our AI didn't beat the S&P, I would put 100% of my money in the SPY, which is what I generally recommend to my students. If you have a little bit of savings, open a no-fee online account and put all of your money into the SPY. It is the safest. And if you want to be a little more aggressive, the triple Q, the NASDAQ. The NASDAQ is going to go get killed, though, and if you get nervous during a market crash, you might sell it. And so that brings me to my favorite piece of market research, which is Fidelity's 75-year study of the best performing accounts. They were the accounts where people forgot about the accounts. Rich people have so many accounts, they forget about this account or that account. And so that account was forgotten about and nobody touched it, and the stocks were just left to grow. And most stocks over time grow. I mean, that's the point of a stock. It's a formation of capital to make more capital. So that's their whole intention. So on average, humans will be successful at this. And so on average, a good stock will go up quite a bit. And human interaction on average takes away. Oh, there's a fantastic stock from Robinhood, a stat from Robinhood. 9% of Robinhood's traders are day traders, but 1.5% of Robinhood's profit is from the day traders, which means that most of their day traders are not making money. So interesting little stat. So I don't do day trading, and generally it is about 80 to 90% of day traders lose money. It's hard. Humans want to sell when things go down and buy when it goes up. It just feels good. Green feels good. Red feels bad. Who wants to get poorer? Nobody.
Yeah, it's the
pain.
psychology.
It's
the psychology is playing your tricks.
Getting mental punches in the face is not easy, and that's what you're doing during a market crash.
With regard to the time, I would cut off now. You will later join the panel in like 1 hour, 22 minutes. So
awesome, Clemens, you're the best.
Thanks a lot, and yeah, see you later again in New York. So bye for now.
Right.
Great. So yes, we will continue in a couple of minutes. So let's say one or 2 minutes. I just show you the announcement trailer for our next speaker from France. So here we go. Great, and here we are back again with our next speaker. This time we jump across the big pond, and now we are finally in continental Europe. With me at the stage, I welcome Nicolaus from DreamQuark in Paris. Hi, Nicolaus.
Hello, Clemens. How are you?
Yeah, I'm fine. I have a coffee, always fine. Yeah, Nicolaus was brought to us by our partner organization, Hub France AA. So big thanks to Julian and Gael, the partnership managers and the managing director from Hub France. So yeah, without further hesitation, I would hand over the word to you, Nicolaus. I see you also have the speech prepared. I will leave the stage and come back again for the Q&A session. So see you later.
So thank you very much. That's a pleasure to be there. Basically, today I will speak about AI for sure, but how at DreamQuark we apply AI to the waste management industry. And maybe to give some words about DreamQuark. So I created DreamQuark in 2014. And since 2014, we've been focused on developing new type of technologies, specifically for enabling trust in artificial intelligence. I think trust is a really big topic right now, as people are looking to adopt further this technology as it's spreading across the world. We see that several organizations across the world are looking at trust as a fundamental enabler of the adoption of AI. And here in Europe, we are really at the place where trust is fundamental, in particular as we are the first organization to regulate AI. And on the 21st of April, a new regulation has been proposed with a focus on different use cases, which are considered high risk and where trust is fundamental if we want to deploy AI to solve this use case. So DreamQuark, we have had several phases, and one phase was to build like the core technology that we are now using, and we have built a platform that we call Brain that could democratize the use of these technologies to have different persons that can just take data, create algorithm, deploy algorithm, and make sure that on these algorithms are deployed, we still have good performance. And since now, so we've been basically at the time focusing on one large industry, which is financial services. And now we are focusing since September really specifically on a smaller set of companies in that industry, which are the wealth managers. And in the wealth management industry, we target life insurance, we target private bank, and we target also brokers and independent financial advisors. Basically, since now September, that's a really big transformation for the company because where we were focused on the building of the algorithm, now we are focusing more on the end users. And in this case, these end users are relationship managers. And when you want to have AI that is put in the end of these financial advisors, that's actually a big challenge. They need new ways of looking at the AI. And within the past 6 months, I have really embarked all my company into a new journey. That's short, but I think this is what was required after 2020. Behavior shifted, and people that were, in particular companies that were looking at deploying AI, were not looking to just assess AI, but they wanted to have clear use case, and that AI would provide a really clear value proposition on how to solve this use case. And what they want now is to see revenues out of their AI initiatives. So that's where we are right now. We have trust at the core. We are targeting an industry. We have really specific use case. And what I want across this presentation is to show how we use AI to solve this use case. And I will show you what the new product that we are building is. And obviously, this product is connecting to what we already built so far. So I won't speak about, I will speak a lot about my customer and about AI. So the reason why we focused on this industry is that it's a really interesting industry. That is industry that is on the verge of transformation. They urgently need to transform. Most of them have not yet realized that they need to transform, but they have a lot of warnings, and some that are really acute have understood that they needed to transform, and most of the industry is lagging behind. But really right now there are many threats for wealth managers. There are threats from big tech, there are threats from new fintech, wealth tech that are willing to take shares from them. There is a big shift on the customer, where most of the customer of this industry are, I would say, rather old. And at the moment, there is a wealth transfer ongoing, where the older generation is transferring the wealth to the younger generation. But that younger generation obviously doesn't have the same behavior as the older generation. So there is a change in the approach of wealth. In the past, people were owning. Now, the young are mostly using. That's a big shift for them. And also, this is an industry that is extremely regulated. So all these threats are really urging them to transform. Something that some realize that they need to focus on two areas across all the priorities they can have. One is sustainable investing, where now a lot of funds that are owned by or where money has been flowing over the past years. So a lot of these funds are now focusing on responsible investment, and there is still a lot of assets under management that are not within responsible funds, but they are urged now to move the assets from what they call stranded assets, like oil, carbon towards more responsible assets. There is urgency from the customers that are expecting their investment to be invested towards the ecological transition, but they also have urgency from the institutional investors that are expecting to have a better practice. The other trend is around the digitization, and in particular, data is core to this digitization, and they have in front of them customers that expect to have, for example, hyper-personalization and more hyper-personalization, so recommendation like Netflix, a really digitized customer experience. And what they want ultimately is that there is a convergence between these two trends, and they expect their risk managers to be able to provide them an impact, and an impact they can increase and an impact they can measure. But in particular, as we are in Europe, the challenge that the waste managers that are right now adopting AI is that they see that AI is getting regulated. So that's an industry that is massively regulated. In Europe, MiFID II, for example, or the DDA, which are two regulations, one on insurance, one on banking. And at the same time, now there is this regulation that is looked by regulators. There are, for example, the Hong Kong regulators that has been looking heavily at that. Also in Singapore, the Monetary Authority of Singapore that has established guidelines on how to use AI. And these are not only guidelines, but now metrics have been developed, and companies are engaged into using this metric and adopting this guideline. And in France, for example, the ACPR, the French regulator, has also released different white paper. And we can see also in Luxembourg that there are the same white papers that are somehow being published to say that companies that want to deploy AI in the financial services sector need to embed in their technologies explainability, so that the capacity to be able, when you have a recommendation, to know why this recommendation has made and somehow how. There is a key requirement around data protection and security, around accountability. The risk managers, the advisor are key in waste managers. They need to be accountable when they follow a recommendation, when they push a recommendation on their customers. Obviously, companies look at AI governance and mean data governance, but also algorithm governance and usage governance. And then there are bias. And one of the bias is that you do not treat men and women the same way, and they have different outcomes and different results. And that's basically where we are, where the industry is now. And through our solution, we help them have like solutions that are made for the advisor, so that the advisor can lead that transformation, but at the same time, we integrate this requirement from the regulator. And what we have, so up to now, we are focusing on service one, which is Brain. This is a software that enables our customer to have the full cycle from the data acquisition, data preparation, through data pipelines, creating and training machine learning algorithm, then deploying this machine learning algorithm. And one challenge right now when you deploy this algorithm is that you use data for basically training the algorithm. That's historical data, customer data. And then once you have deployed, the customer interact with the algorithm. And as some customer may leave, some new customer may join, you may have new behavior over time, or you have COVID-19, and before COVID, you have some behaviors. After COVID, you have new behaviors, and your algorithm is not behaving the same way. Sometimes it doesn't perform as it was expected, and therefore you need to monitor this algorithm. And through Brain, they can really do all that. And at the same time, we have a framework that I will present that enable our customer to have a reduction in bias, but also more explainability. And now we are developing the service 3 to service 4, where basically these are applications for the risk managers, which is really key. Basically, so what we see is that it's not just waste managers that needs to adopt this technology. It's much broader. That's something from Gartner, for example, where Gartner highlight the need to focus on the agent recommendation or target marketing. These are use cases that are really performing right now, that's good for the customer experience, that's good for revenue growth, and at the same time, that's something that is feasible. And there are multiple trends in AI that are now being looked, like explainable AI, MLOps. That's the two elements that I've been presenting. You need to explain how algorithms are taking the decision. You need to monitor, train, retrain, train, deploy, retrain, so that you still at the top of the curve in terms of results. And basically, with the different customer we have here, we have a focus on the life insurance. We're able to double or even more the response rate on their campaign. We increased by 75% to 300% the conversion rate on product recommendation, and we are able to reduce by up to 50% the churn. And these are really important numbers for our customers. So here we have an example where using our software, we were able to, as we work with a French private bank in Switzerland, to help them as they were looking to move rapidly some of their offering. So they have, in waste management, you have three types of offering. One which is called RTO, where basically the customer is asking the bank to pass orders to invest. There is something which is called then on top advisory mandate, where basically through a fees, the bank start to advise you on what are the best investment for you. And then you have what is called mandate, discretionary mandate, where actually the bank is making the investment for you. You just say, I want a return, and then the bank is deciding where to invest your funds based on some guidelines that you give to the bank. And the key what's key for them right now is to move from RTO, which is generating lower revenues now, to advisory or discretionary mandates. And through our approach, we enable them in less than 6 months to create a model and for each model that we were creating, we were providing model explanation, but also decision explanation. They assessed our solution on the helping the relationship manager to recommend new ESG product for their customers. They figure out that one model was working really well, and they were able to close some customers that for some made more than 10 million of AUM deposits. So that means that they have 10 million to invest, and they decided to invest them in the fund provided by these customers. And at the end, they get 37% conversion rate out of the campaign, which was really a great number. And in total, it was close to 50% of customers that could have transformed, but at the same time, they realized that some customers decided to transform to other banks, and they actually did transform before they were called. So they also realized that using that type of approach, you can be faster than the competition and close customers before your competitors. The approach we have is really we focus on all the customer journey from pre-sales to retention, and through our software, you can really solve different use case. In that case, it was next best offer, but as you saw, we already have a retention use case, and you can really provide a great answer at different moments of the customer life cycle. So it's here what you have, and I will present there differently at the end, is that you have an example on how it looked in September before we jumped further into the application, but that was the first version of what we provided to relationship managers. So they were able to have different type of recommendation. On one case, on top left, this is what they get when we recommend a diversified fund, for example. So there is Esther the Award. We generate a score, and we tell them this is its product that you need to recommend. But at the same time, we have explanation. So you have the positive factors and the negative factors. So positive factors are factors that are considered to help the decision, help this recommendation, and negative factors are factors that are important but will rather indicate that the decision could be another decision. And it's important, our customer would expect us to provide this type of information, and also to know from a simple visualization, so something that is simple and textual, what are the key elements that are identified by the algorithm as important. And we also have developed at DreamQuark what we call in this case, a purchase simulator, where you actually are able to generate what-if scenarios. So you have the key explainable factors, and for each factor, you can play with this factor. And by playing, you can see how it affects the decision. And basically, if you have a factor where by playing a bit, you identify that it's changing the decision, sometimes it may help you create action plan in order to move a customer from not accepting to accepting. We also have portfolio analysis, and something that is really important that I discussed is that you monitor the algorithm, but what you want is to be able to have the relationship manager that say, that product, I pushed it to the customer, but the customer did not want to buy it, or this one, he bought it. And you can then tell the algorithm what was helping, what was the final decision of the customer, so that the algorithm can continue to learn over time and get better and better over time. Something we have also is that when you create an algorithm like that, basically what it does is that it assigns a score to each customer, and based on the score, you will decide whether you have one decision or the other one. And to know what will be the decision at the end, you have a threshold. If it's above the threshold, that means that the positive decision is below the threshold, it's a negative decision. And you want to optimize the threshold based on different factors. So Waste Manager has constraint, the size of the team, how much revenues they can do, and what they want is to optimize their spending with their revenues, or make sure that the campaign that they will launch are meeting the requirement. And therefore, they want to know how many customers they need to call to get an objective. And through our application, we can get them that information really easily. Also, something that is important is to realize that when you do AI, you actually learn from bias in this data, but there are bias that are good and there are bias that are bad. One type of bias is equity bias, discriminatory bias, where you discriminate men and women, for example, they don't get the same outcome at the end. Or you have also technical bias, one which is called data leakage, where this is actually happening when you have some information in your training set, which is not information that you would have in production. So one example is you have customers that left. After they left, you assign a tag telling that they left for that reason. And when you train, your data scientist forget that there is this column, and the algorithm uses this information, the tag, and it realizes really easily that whenever there is a tag, that means the customer left. So it will learn, if I see a tag on this column, I know that the customer will have left. So it becomes really good on the past, but is absolutely awful on the future. And that's not something you want to have. Therefore, it's important to detect it. Also, we developed technology for assessing fairness, but also for redressing the algorithm. It's really important to redress algorithm, and we have developed a technology that once it knows what are the discriminatory information, it can redress the algorithm really easily. So I'm conscious on time. So, but I'm close to the end. I will finalize with that element, which is monitoring. So basically, the last element that I want to highlight is that right now, what really everyone realize in the industry now is that building and deploying the algorithm is really the start of the story. This is when the algorithm is being used that you actually start to see problems. Now, when your algorithm is deployed, you need to monitor it. So we have developed technologies to that. There is an industry that is getting built, which is called MLOps, so machine learning ops. It comes from a movement which is called DevOps, that comes from IT, where you have a solution, you deploy that solution, customers start using it, you get feedback, you monitor this feedback, and then you create a new version, you redeploy, and if you can deploy really quickly, really iteratively, you build a really great product that is really aligned with the need of your customer, and because it included customer feedback. That's exactly the same with machine learning ops, where you have an algorithm. It's good at the start. You start to use it. You see what's good, what's better, what works, what does not work. And over time, you continue to retrain. So you get what we call the ground truth. That means the real decision of the customer. So there is a recommendation by the algorithm. It is pushed to the customer reacts. There is the real information that is stored. And based on that, you can improve your algorithm. And you start with an okay algorithm, and over time, by iterating, you start to build a great algorithm. And there are multiple indicators that we assess. So we assess whether the algorithm is stable. We assess whether if you have a training set and the actual data set that is being generated during the interaction with the customer, you identify how the data is shifting, and you can identify that there are some information that are becoming different, and you can look at how the distribution is getting different. There are different type of drifts. Something, for example, we call covariate drift or concept drift, and we are able to monitor all that, and also to monitor KPI, business KPI, because making sure that the business KPI keeps being great is really important for our customers. I will just stop there really quickly, but I will show you just a minute how it looks now in terms of screen. So it's really different. I have only 1 minute left, and I will ask you question so that you can ask me whatever you want, and I'll be answering to your question. Just a minute. So I share screen. So now I hope you see it. That's good. So now this is how it looks. So basically, we have more use cases that are available through this application. So I just stopped on the screen, but you have basically the access to the advisor, the customer, the prediction, the product. So that's really easy to configure. And then you have a contract. So on a contract, you have different investment products that are assigned to that contract. You can basically have the different recommendation. So it tells you what are the next action to do. So here there is a use case which is recommending a product. So it's advisory mandate. You have on the bottom another recommendation, different ESG product, so sustainable product. You can also have a use case which is around monitoring your investment portfolio, and you get different information. So I realize it's in French, this one, but you are able to have a vision on how stable is the model as you are making that decision. And you have, as I presented below, the explanation with the capacity to comment the explanation, but also give a note to that prediction, so that we can use that in order to know whether it was good or not, and we can improve really significantly this explanation. So I'll stop. There are many things that we do at DreamQuark, and the last thing I want to say is that we continue to do research. We do research on natural language processing. We do research on explainability, and one example of the last initiative we launched to support that is a natural language processing activity to analyze not only tabular data, but also, for example, emails. And for every single recommendation we make using that text, we are able to explain what has been identified in the text what has been identified in the text to make that recommendation. I stop. I think now you can ask me a question.
Great, Nicolaus. Thanks a lot for providing the insight and also a live demo. That was cool, like showing the product in action. With regard to the time, I would just like take one question, because you will later join us on the panel anyway, together with Patrick.
Yes.
So one question was, it's actually very startup related for, and there are also many banks listening, so you're not sitting at home. It's very difficult for most startups that are doing fintech here, let's say in Austria, to cross from the POC world to actual products, or let's say to larger projects. So let's say from 5-digit POCs to really have a customer that is creating annual recurring revenue. So what would you say was for you the biggest challenge in crossing this gap, and how prevalent is this in France, that customers ask for a POC and afterwards say goodbye and you never hear from them again?
No, so we have customers that work with us since now more than 3 years, 2016 for the oldest customer we have, and that customer also invested in our company in 2019. One of our also earliest customer decided to renew last year for the next 3 years. So that's something that is feasible. But there are many elements to be added into a solution. So when you come with a bank, you need to demonstrate first the value of your product, that you make an impact. If you're not making an impact, it's hard to move from the POC to the annual recurring revenues. Then you need to fit in an ecosystem of softwares. You're not the one deciding what software exists there. You basically need to show that your solution will be able to integrate with this other software. And I think that the two key elements, the last element is that, I think there are three major elements. One is value generation, second is integration, third is adoption. If the user are not adopting your tool, it will not be able to move from POC to ARR. So we are really vigilant with that, and obviously to be better, we raised money. We have raised 20 million euros from the start of the company to be able to have a great product for our customers.
Excellent. Thank you very much for this insight, and I also look forward to hear from you again in 50 minutes. So for the time being, goodbye to Paris, and talk to you later.
Thank you.
Sorry, I cut you off too early. My apologies. So our next speaker is from Switzerland. So we continue our travel to the east. We started in the United States, then we went to France, and now next is Switzerland. But before I move Philippe on the stage, let's make a brief video introduction. So see you in 2 minutes or 90 seconds again. So time to stop the self-made video, and with me here together on the stage, I welcome Philippe from Switzerland. Hi, Philippe.
Hey, Clemens. Many thanks for having me.
Perfect. And you're not muted. This is like the first time ever. So thank you very much.
I try.
Also, thanks for being with us at the panel later on. I see you have your presentation already shared. So with regard to the watch, I would directly hand over to you and see you later in the Q&A session.
Perfect. Thank you very much, Clemens, and everyone, an extreme welcome from the Zurich office of Yokoy. It's quite important to understand that we are not a Swiss startup. We do consider ourselves a Swiss and Austrian startup. Yokoy is an expense management solution that uses AI to make sure that we are getting an advantage over all other expense management tools to really solve that painful problem that I'm sure all of you know. Expenses is a pain for so many people in a company, and it's still an unsolved problem in our opinion. That's why we set course about 3 to 4 years ago as a team of 5 co-founders. You do see Lars, Thomas, Melanie, Davis, and myself here. On the left-hand side, we are the 5 co-founders of Yokoy, and in the meantime, we are extremely happy to have not only Christian as our head of customer success on board, but also Stefan Hebenstreit as our managing director in Vienna. So we do have an office in Vienna, and we do feel pretty much as much Austrian as Swiss. You see, we have 3 offices in total. The Munich one is just recently opened in Germany. So we are growing, and we are now covering the entire DACH market. Very shortly, I will go through around 5-10 minutes about Yokoy, expense management space, what we're doing, and we'll then go into the entire artificial intelligence part, how we're using AI, and how AI helps us to be the best expense management tool in the market. At the end, I'll allow for certainly 5 to 10 minutes of Q&A in case there are any questions, and I'll be later on at the panel to make sure that we can discuss some additional points there. Yeah, I think important about Yokoy is not only the team, but the team is always an extremely important part. We do position ourselves as a research-based company. Because of AI, it's important for us that we are driving innovation and helping, therefore, also our customers to really implement. So applied AI is an extremely good title there, to really implement that AI easily in their processes. We are backed by SIX Group and Swisscom. These are 2 major Swiss venture capital investors that have helped us during the first financing round about 2 years ago to get off the ground and make sure that we could build what is now Yokoy with over 30 employees and with more than 300 customers, whereby, for instance, BDO in Austria is one of our customers, FIFA in Switzerland and all over the world we can proudly count to one of our customers. We are quite lucky to have really, really nice customer base. So why are we different? We truly believe that expense management, the way you probably know it, should be a thing of the past. You most likely remember expense management as being extremely tedious, paper-based, with a lot of steps and a lot of, especially a lot of time wasted on just making sure that all the boxes are ticked and all the papers are handed in. And where we are taking it to a whole new level is really where we say, why should everyone or every manager, every finance team look at each and every receipt, which is extremely time consuming and inefficient? Why can we not just truly automate the entire process from the picture of the receipt or upload of the receipt all the way to the correct finance booking, and just using AI, picking out the expenses that are outliers, exceptions, the ones that you would truly want to look at manually as a cost center owner, as a finance person. And thereby I'll get a bit more into detail later on, but we're using more than 400 data points on one single receipt to make sure that we don't only read out the different values, the different words, we validate them. And based on the validation, we then make sure that either it's completely processed through or it needs a manual check by a person, that because it's flagged as an outlier, or it was outside of, or it's potentially a fraudulent case or something like that. We can do that. I can give you one very good example there. You can do that on one hand by really adding, so you read out the line items, and then you're adding up the sum of the line items, and you compare it to the total that you found. This is one very simple validation you can do on a receipt. That is, in that case, that's not AI-based, but that's a good example in showing you how we can work with a receipt and making sure that our model can already do a lot of pre-work that is currently being done mostly by people, by employees. I'm sure you've been at least one of those 4 personas, because these are the main personas that are included in the expense management process. The first one is the employee. As an employee, you really want to make sure that if you're already spending money on behalf of the company, you'd like to get it back as quickly as possible, especially if you're traveling often and that sum or all these amounts are summing up to quite a big amount, and you want to make sure that you're getting back the money as quickly as possible, as these are reimbursable expenses, so you're spending something on behalf of the company for the company. There are a lot of difficulties today as an employee. One is certainly if you're losing the receipt, how are you able to prove to the company that you've actually spent that money, which you would like to get back? Knowing all the expense policies and all of that stuff is just extremely difficult for all employees, especially the ones that don't have expenses on a regular basis. And it goes on and on. And in the worst case, you even have to stick the receipts on papers. You have to send them to some outsourcing center, or you even have to manually write down all the VAT, Mehrwertsteuer, Umsatzsteuer, so what kind of Mehrwertsteuer, what kind of VAT was on that receipt, stuff that the finance team then has to check anyway again, because there's pretty much no way that such a task can be pushed or should be pushed all the way to the people that are traveling on the ground. As an assistant, always is a big thing. As assistants typically have the issue that they're getting just a lot of receipts and have no clue what they're about and how to actually enter them in the system, how to claim them back. Managers and cost center owners have other issues which are quite difficult. On one hand, it's that they're cost center owners typically, so they're responsible for the cost that gets booked on those cost centers. They need to make sure that they're budgeting appropriately. They need to make sure that everything is within policy and all of that stuff. The finance team as a last one, for them, it's also extremely difficult because they're typically at the end of the chain, but for them, there's a huge responsibility because there might be a tax or finance audit that wants to check whether the receipts are properly handled, whether the policies are adhered to, whether the receipts are appropriately archived, that they can be checked also during a later stage. All the finance bookings behind, making sure it's appropriately booked in BMD, DATEV, SAP, whatever finance system is used. So you do see that expense management seems at the beginning as a quite straightforward process, but then my main point for that slide is really that there are a lot of different people involved in that process to make sure that it is handled appropriately. A lot of different touch points also means for us a lot of different opportunities to automate, to improve. And that's exactly what we have done, or what we are still aiming to do with Yokoy, to make the life of the employee, the assistants, the managers, and the finance team easier. So how are we doing that? Yokoy is a software as a service solution available as a desktop app and obviously also as a phone app. So on Android and iPhone, you're able to use it on the go. And it's quite important that expenses, there are different forms of expenses. You can have receipts, you can have mileage expenses using private car for the company. Per diems is a big thing, Tagesdiensten, making sure that whenever I'm on a longer business trip, that I'm getting reimbursed for all the additional expenses that come with such a business trip. They're typically highly regulated by Austria, Germany, Switzerland, by the government. But sometimes you just get a receipt via email, so you want to be able to forward it quickly to Yokoy, and we can then process it. And credit card transactions is another big topic, because not all expenses are done by the employee with their own money, which they want to get reimbursed for. But there are also quite some expenses, or quite some employees that get a corporate credit card. So there are quite some expenses flowing over those credit cards, which need to be probably approved the same way, but handled completely different in the finance team. Because there needs to be, for each and every transaction, at least one receipt in order for the finance team to be able to prove what these expenses or these expense items were for. What we're doing is we're making sure that whenever you take a picture of a receipt, you're uploading it, you forward it, or whatever you're doing, you're creating a new trip, then we do as much as possible for the employees in the first step. So we are not only reading out the different items that are needed, but we are also checking it against the expense policy, which is a rule-based check, and we're using the entire artificial intelligence component to make sure that we also can flag outliers. So it's always difficult to then tell the employee why we're flagging it, but it's extremely important that they realize that, or at least the managers later realize that there is something wrong with that receipt. Please take a manual look at it. It's really worth it. You don't need to look at all 5,000 receipts that you're getting every day, but please look at exactly that receipt, because this one is one that we are thinking that there might be something wrong. The auto check I already mentioned, so a lot of stuff there is happening on the app. Typically, this is used while traveling. There's an offline functionality, obviously, as well, to make sure that whenever you are in the US traveling around, you want to make sure you can still take a picture, even though you don't have service, you don't have internet. So most of the user experience comes from an intuitive platform, an intuitive mobile app, while then later on for the finance team, most of the tasks are done on the web application. The entire integrations are obviously key. It's a big challenge to integrate to all these tools, but this is something that for us, Yokoy, it's extremely important. We have a dedicated team only taking care of all the integrations. And one example is obviously the BMD integration or the SAP integration, which is not only a one-way API, it's typically a two-way API. So we're getting users and we're getting cost centers projects from the finance tools into Yokoy to make sure that they can already book expenses onto the correct cost center. And then whenever it's approved and finance reviewed, we're pushing it to SAP, BMD, or whatever to make sure that it's correctly booked there. And then in case there was a reimbursable expense, it was paid back to the employee, or it's at least correctly booked in a financial booking sense. This is quite complex, obviously, as this is also a semi-regulated market. We need to make sure there that the expense receipts are properly archived, that VAT, which is read out, is also appropriately validated before we book it. And it's actually quite new, you can now also connect to your business travel booking tool to make sure that all the business travel is also flowing through Yokoy, because Yokoy itself has so many data. It's not only automatically processing your entire expense management and credit cards and business travel, it's also serving you as an analytics platform. And we have just brought out our analytics platform 2.0. This allows basically for pivot-like analysis to make sure that you know at the end of the year how much you've spent at which merchant, who has been where. So all of the stuff that's especially for a financial controller important when they try to negotiate deals with hotels, with other companies, with other suppliers, and also to make sure that they know where the cost was booked to. So there's quite some flexibility on the reporting and analysis side. Trips is an important one for us, because typically when you're using an expense tool, you're not just uploading a receipt, you're actually on a business trip. I know, 3-day trip for me, for Zurich to Vienna and back, or from Zurich to the US or something like that. And we're able, based on the per diem rules that we have set in Yokoy, to make sure that we are already pre-filling the entire trip when you tell us where you're going. So you just have to enter, my home base is Vienna, I'm going 5 days to the US, and then I'm flying back to Vienna. And we're already preparing the trip, the entire trip, including all per diems that are applicable for you in order, or for the employee that is at the end traveling, in order for them to save as much time as possible and not having to add these, and probably first figuring out what kind of per diem rates apply for an Austrian employee working in Vienna, going to New York for 3 days. So all of that stuff we can already cover to make sure that it's easy, and there's certainly less errors because we can already cover that rule-based. So Yokoy we are a company about 3 years old, but we are quite lucky to have a couple of international customers, and we're also able to, through mouth-by-mouth advertising, CFOs were talking about us abroad, which gave us quite a reach. We are by now active, so Yokoy is by now implemented in, I think it's around 46 countries in the world, which is quite good, and making sure that we are this true global expense tool, or expense management tool, that can automate these processes. But now it's probably quite obvious also that with such a big reach and with so many different people involved in that process, there is quite some need for not only the rule-based approach, but also for an artificial intelligence approach. That's why I would like to now dive a bit more into how we're using AI at Yokoy, and especially how AI helps us to really be the best expense tool on the market. So when we set ground in the very beginning, we were really truly asking the question whether we want to just go with a rule-based approach, or with an AI approach, or combined. And I think from the presentation, you have now realized that we are really driving this combined approach. But AI is extremely important for us for different reasons. One is that whenever you look at all these receipts here on the right, they are so different. So a receipt can be it can really be just a extremely small piece of paper. It can also be an A4 or even a multi-page A4 PDF, which makes it extremely difficult for the entire reading out and validation of the relevant amount of the relevant fields. And that's why AI is truly helping us there, to make sure that it doesn't really matter which format a receipt has. We can process it, and the tool can learn on it, and that's extremely important. Then incomplete information is actually quite a phenomenon there, because you don't always have the same information, and certainly not in the same structure. Mostly you do not have proper tables, which you would expect on a supplier invoice. A receipt might have a kind of an artificial table with just 2 columns, but this is not always, they're not always putting out the VAT and all of that stuff in the same format. So figuring out how the receipt is put together to make sure that we are reading out the proper fields is a big challenge that a rule-based engine would mostly fail, especially when new types of expenses and new countries are added, because adding a new country means obviously also that a new country, there are different cashier systems, different ways of how to issue receipts, and all of that contributes to us leveraging artificial intelligence there. Then with the countries and languages, so this is also quite a funny one, because by now you don't always have just one language on a receipt. You can actually have multiple languages, or you can have, if you're going to your local Italian restaurant, most likely there will be part of it in Italian, or maybe even the entire receipt in Italian, even though you're in Austria, you're in Switzerland. So this is truly also something that helps us there to make sure that we are not getting a bias just based on language, and then would allocate it to the wrong country. Speed and accuracy is an important one, because you do lose employees when you have a tool that's difficult to use, that's slow, and that's why user experience is extremely important for Yokoy, making sure that employees are really encouraged and should be using it on the go while traveling, and not collecting all these receipts and then at the end of the year submitting them to the finance team, which is bad for both sides. The employee gets back the money much later, and the finance team cannot properly budget, and just has all the cost items then booked in December. Yes, and the resolution, distortions, all of that is also quite important, because, as mentioned before, receipts are just not always proper A4 PDF pages. So they're typically bended. They're typically, sometimes even half an edge off. So this is something that should not have an impact on the actual output at the end. And that's why AI is supporting us there, or helps us to make sure that the type of receipt is not impacting the result, and the validation obviously as well. How it works, quickly put together in one example. when the employee takes a picture of a receipt or uploads the receipt or forwards the email, whatever is most convenient, what we're doing first is we're trying to calculate the way it is distorted, and we're trying to make it even. So this is the first stage, because as mentioned before, receipts are typically bent, which is quite difficult for any OCR to then work with those images. So first, we're trying to make it even. We're calculating the different angles. Then once we have it even, we let OCR go through. OCR gives us the different characters, and so the OCR model is something we do have. We don't have it in-house built. We do buy the OCR, because the OCR, in our opinion, is not something we could be better at than the ones that have been working on that for 10, 20 years and are, just continuously improving it. So OCR goes through and gives us the characters. What we're doing then is we're putting together the characters ourselves based on the banding boxes we have. And we are putting together not only the words and the amounts, but then we are going through it and we're making sure that it makes sense from the logo on top all the way, or which doesn't have to be on top, but from the logo, the pictures that can be on the receipt, all the way to the text and sometimes the tables that you do find on some receipts. Then I have just a couple of examples what we do with these different results. You do see here we have on one hand a merchant which we're trying to extract. So we're trying to auto-populate what merchant was that receipt is that receipt from. So what is the actual supplier? And there we have quite some. We have on one hand a database based on our receipts that we already have, and we can validate already based on those receipts whether we have something similar already. And they're also their addresses, their websites. There is sometimes the name even written in a different font. So you do have quite some, or the artificial intelligence, if you would like to think how it does it, it is somehow using all of this, or it can use all of these factors to make sure that the merchant can be extracted with quite a high certainty. Categories.
Philippe, if I have to jump in, we are running a little bit late already, so might I ask you to come to a conclusion and that we also move the Q&A part directly to the panel, which will start in 30 minutes max anyway.
Yes, so like absolutely.
Famous last words.
Yes, perfect. I'm jumping to my next and also last slide, which is, in my opinion, extremely key. Artificial intelligence is for us not just all of what I just mentioned before, it's also a way to make sure that our tool improves on a continuous basis based on additional receipts and based on the decisions taken by the users when they, for instance, approve something, when they decline something, when they send something back. This gives us all a lot of data to make sure that we can retrain our models based on the new receipts, based on the decisions. All of this data can be used to daily or weekly retrain the model to make sure that it truly gets better, and you can feel it as a user when you're taking a picture of a receipt or uploading a receipt, that it actually, it not only overall gets better, but also it learns for each and every customer and company. So when they have specific categories set up for that company, it can detect after, obviously, enough, if there's enough data in there, to make sure that our customers truly buy a tool that is getting better based on their data, which is something that I think is quite cool. because you don't want to buy a tool today that is outdated in 5 years. You actually want to buy a tool today that is still the best tool in 5 years and has probably even learned based on your data. So this was my last word. Thank you very much, Clement. Sorry for running over time, and I'll be at the panel at 4 p.m.
Yeah, thank you very much, and no worries. If we were not late, it would not have been an online conference. So thanks a lot, and
thank you.
See you in a couple of minutes.
See you in a couple.
Now you will next see just a very brief video announcement of our next speaker from Adobe, and see you in 60 seconds. This is
from the products and services they use every day. Every experience is unique and personalized, just right. Why is banking different? Customers are treated as numbers, accounts, and products? They're often misleading and service a broad set of needs. Our goal is to create a truly personalized banking experience, one that truly understands you as your needs change and throughout your relationship. Let's now focus for a bit on one of these unique experiences. A day in the life of John, a young entrepreneur. Every month, John receives an account statement in the mail. Along with his finances, his bank is recommending digital security services, specifically designed for his activities. Short of cash, he stops by a local ATM. For guarded transactions, ATMs verify today's photo of John against stored images. Adobe appreciates the changing needs of individuals, and our facial recognition and content intelligence acknowledge John's changing appearance. A few hours later, across town, an ATM captures imagery of another unique moment. Through image matching irregularities, Adobe can automatically identify potential threats. To safeguard its customers, fraudulent activity is sent to local branch managers. They quickly review the photo discrepancy, read event details, and can alert the appropriate authorities as needed. Within seconds, John is also notified of the suspicious activity. The statement insert had warned him of this, but the limited access imposed on his account draws concern. John walks into the nearest branch and is visibly upset. Once he gets to the bank, immediately John is recognized and image sentiment analysis is shared with select employees. A specialist, Martha, approaches John to help restore the account and reaffirm a positive experience. Seconds ago, Martha was able to quickly review on her tablet John's case and have an instant overview of all the main issues. The two begin to discuss digital security, from fraud awareness to online services and beyond. John is delighted to learn the bank has his interests in mind.
Hi, everybody. Not sure if that came across how it was meant to there, but I guess hopefully you got the sentiment in terms of AI being used in visual recognition at an ATM and then to spot fraudulent activity. And I'm going to say something now that's maybe potentially contentious. I'm just checking. Can you see my screen as well, Clemens? Sorry. There we go. So I'm just going to say something that's slightly contentious in terms of, for me, that's an easy use case. And that might sound sort of arrogant, but what I'm talking about here is when people think about AI, they tend to always look at, picture recognition, and then sort of how you use that to drive some efficiencies. And in this case, around the security aspects and facial recognition to ensure that it's the right person. And I don't say that lightly. When I say that's an easy use case, I think it's an easy one to think of. When we start to look at the art of the possible around AI, I think then a whole world opens up into what we can do. And there's some things that are more difficult. But the key thing for me is that data that underpins all of this is the key driver. So hopefully sort of as I go through the presentation today, you'll see what I mean by this. So if we sort of think about humans, and as we grow, we learn, and we learn from experience. And if you think about the concept of AI, it's a similar sort of thing, but for an AI, the experience is the data. And sort of a bit of an oxymoron here, but history has taught us that you cannot use past behaviors alone to predict future behaviors. And what I mean by that is, a lot of the way that we've done analytics in the past has been looking at past behaviors and then trying to predict what happens in the future for individuals. And that's led to mistakes. And I think in the last year, it's probably been sort of emphasized even more so that you need a mix of what's gone on in the past, but also an idea of what's going on in the present and the real time. And bringing those different lenses together gives you more insights. And basically, it's a richness. So we learn as humans, and we learn in real time. We learn from our experiences, but we learn from other people's experiences, what we read, what we see, what we hear. That comes together to form our own opinions. And then we use those experiences to create our own experiences, if that makes sense. And if you think about that concept as we go through this in the world of AI, I think this will start to lead to a way that AI will change in the future in the way that it's viewed, how we do things. We're all aware of the explosion of data, with the things like IoT, smart buildings, cities, autonomous cars, etc. The connected house, and so on and so forth. The challenge is, how do you sanitize that data? How do you make sense of it and structure it in a way that you can then start to sort of do it without being a data scientist? Believe me, I'm not a data scientist. I'm a CTO. I work with people who are much smarter than I have. These are the people with the PhDs who really do get into the detail of what goes on here. But then I guess the challenge is, how do we then start to democratize data and AI so that the consumers who need to use these services actually, as they become much more tech savvy, but they don't need to be that data scientist or an IT engineer to consume these services. So let's explore this as we go through. And what I'd like to do, first of all, is just level set. From my point of view, this is how I see AI. It's almost like an onion layer, if you like. So artificial intelligence is, in a holistic sort of way, is really techniques that enable machines to solve a task that humans would normally do. Yeah, and that can lead to a number of different outcomes. It can be around efficiencies, automation, mundane tasks, etc., etc. Machine learning is then a subset of that, and these are the algorithms that allow computers to learn from the examples of what is explicitly programmed. You then take that a step further, and the neural networks side of things. So these are human brain inspired machine learning models. And then take that again a step further to deep learning, where you then have a subset of the machine learning, which uses the neural network models to automatically build a hierarchy of data representation. And ultimately, where we go to is into self-learning and sentient sort of being from an AI perspective. But within this, there's one sort of common thread that goes throughout all of this, and that is data. the data that you use. And this comes back to, I link it back to the human experiences that I talked about, which is, as a human, we go through experiences, we go through good, we go through bad, we have all of the emotions that go with those experiences, and that's what shapes us as individuals and beings. And AI and how it's used is no different. It needs its experiences, which is its data. And hopefully sort of you get what I mean by that. So after level setting sort of thing, what I'd like to just do here is give a slant on where we come at it from an Adobe perspective. So we look to leverage AI and data across all customer touch points to deliver a total experience. Again, if you think about it in the enterprise, and in the last year, things have changed so much. The channels where we interact with our customers, we need to be more creative, the content that we use, and then that leads into the overall experience. So where Adobe comes at this is from the three experiences, the three domains of content intelligence, which is looking at using Adobe's experience in creating content, creating and publishing content, how you monetize that, and then train the algorithms to understand things like words, paragraphs, and forms. This sort of feeds into Adobe's approach and offering, which is Adobe Sensei, which lets the technology sort of automate repetitive tasks. And that gets you sort of deeper insights into specific pieces of content. This also gives you richness in data as well. So the better the content, the more richness of the data. And then you have the creative intelligence. And this is around giving the creative sort of colleagues using AI and machine learning and deep learning to speed up and automate. So these are around those efficiencies. How can you do things quicker? Things that used to take days or weeks, now we can do in hours, minutes, and seconds. And this also goes across all interactions and touch points with the customer. And what you may see in the future here as well, it's not just AI, but then you bring virtual reality and augmented reality to this as well. And then finally, the third pillar is the experience intelligence. So leading brands, and especially in FSI, are focused on providing amazing experience. Everybody talks about customer centricity, how we deliver a great experience at every interaction. And this isn't just selling, this is actually how you sort of acquire your customers, how you then retain them. So anything from cradle to grave, onboarding through the life cycle of that customer and every point in between. So it's, as I say, it's not just about the selling, it's about the post-sale service, how you actually treat that customer as an individual, and you drive personalization. So where Adobe looks at this is, delivering the right content to the right person at the right time, thus driving personalization at scale. And just to sort of go into a couple of sort of use cases around this and how we would look at this, and these are sort of out of the box models that we have within and offerings that we have within Adobe. So segment compare, for example. So we start to drive deeper insights into customer data. So if you think about the way that banks have traditionally approached things, a customer, as it said in the video, has been a number. It's been in a segment. This is Joe Bloggs, who lives in this postcode at this age, earns this much money. Therefore, they're likely to do these sorts of things. And that's fine sort of for groupings, but then how do you sort of get the deeper level of similarities and sort of bring those things together? So finding the overlaps in the existing customers and those segments to sort of help marketers to optimize and spend. So where do they focus and where do they get their ROI? Then you get into the audience clustering, which is, intelligently identifying distinct and actionable groups of variable customers and prospects. And then the propensity models. And this is where it gets sort of even more interesting, because this is where you can really drive from a business sense, efficiencies, better customer service, because you start to get the insights around, customers and prospects that are most likely to convert or churn. And we've seen examples of this where we're working with some of the larger banks around how we retain their mortgage customers, for example. Every couple of years, they will look at different offers online, and looking at their behavioral data and how you do that in real time, you can then sort of orchestrate personalization and hopefully then sort of take the journeys on the customers on their journeys to sort of get where they want, so they get either retained as a customer. And if you think about that in percentage terms on revenue, where you retain rather than sort of the churn where you would lose that revenue, it sort of leads into sort of quite high numbers. Then we get into where we start to manage and enhance on the digital asset side of things. And I was just smiling on the previous sort of presentation when we're talking about the photo receipts, and thought, well, maybe this is an opportunity here. You know, we look at this from smart tagging. So how you actually tag the data, how you sort of create the images and videos in your digital asset management sort of side of things. You know, those smart tags deliver better asset discoverability and reduce manual labor. Then you get into the smart cropping side of things, where detecting and crops from focal points. So you actually enhance the image or the video, capturing the intended sort of point of interest across multiple screen sizes, so that the content is sort of headless really in terms of where you go. And then finally, the automatic test summarization, so creating the shorter versions of master text for different marketing channels and so on and so forth to speed up content velocity. So these are just some examples of how we do this. Digital transformation to drive efficiencies through automation while remaining compliant. So compliance, big thing in financial services. And what we've seen, especially in the last year, the need where there's been things like emergency loans for COVID victims and things like that. So digitizing those processes that have previously been manual, time consuming over a number of days, if not weeks, you can then make decisions and get the contracts in place and have the signatures done all in a digital way, and use those sort of use cases to sort of drive a better customer experience. Then you get into the other things, which is around the sort of aesthetics, the boundary detection, how you auto crop on the images, and these all come from the sort of heritage of Adobe and sort of where we've come from, and then form field recognition. So this also probably links into some of the things that Philippe was talking about as well. The other thing, and I heard a great quote the other day, which was, data is only useful when contextualized and used in a timely manner. And for me, this is where, I think Adobe excels. So we bring AI to use those deep insights in real time to help our customers and our customers' customers on their journeys and what they need to do. So when we start looking at things like lookalike modeling, we use an algorithmic segmentation to identify the clusters, using matching existing customer segments and making, finding high value customers easier. Therefore, we can start to, again, drive personalization for those individuals and bring them things that they want. Segment size estimator, so looking at the size, and then you get into sort of marketers can activate high value campaigns faster. And then the trait recommendations, which really sort of generates recommendations on additional audiences and individual attributes for marketers to target and expand audience segments based on base traits. So you're starting to get deeper, richer insights into what we do. And then finally, sort of from a business efficiency side of things, an investment decision, how you improve your ROI, sort of using an algorithmic attribution. So this is around sort of objectively identifying fractional impact of each marketing touch point along a customer journey. So where do we spend our money to enhance the journey of our customers? These are just some examples of out of the box algorithms and sort of services that we offer through Adobe Sensei. Sort of just taking that a step further, I'll show you how it comes together. And this is the key thing for me. I think what I'm trying to get here is it's about that data. If we go back to that onion layer that I was talking about earlier, you've got the data that sort of comes around this. What we do in Adobe, we look at our experience platform to offer our services, which are sort of consumed as cloud app services. And within there, we have some core things that sort of start with the ingestion of the data, how it's classified, how it's cleansed. And we put that into a sort of common state, if you like, and into sort of industry schemas. And then within that, we can start to use intelligent services using our AI offerings to make sense of that data. And then from there, you get the informed decisions to make around how you do your analytics, how you do your customer data platforms, how you look at journey orchestration, offer management, next best actions, those sorts of things. And then they feed up into the wider portfolio. And there's also linkages that come back in from the content side of things, as I talked earlier, those three pillars. So this is just to give you a feel for how it sort of fits together. But in my view, I think this is a sort of key differentiator is in how you get the data, how you ingest that data, and how you collect that data, and unify it. That's the other bit. A lot of things happen in silos in the past, and this is then a unified real-time sort of profile of a customer that then you can use AI on their behavioral data from the digital and mobile channels as well as the physical world. If I take that down a level just to that sort of core area, you see where AI really fits in. And this really sort of reiterates what I was saying about we can get multiple data sources that can stream, batch, however you bring them in, and then how we make sense of that through the data collection, how we put them into a data model, how we then start to sort of unify them and use real-time sort of processing to sort of get the insights, and using AI and machine learning. And then off the back of that, we can activate in terms of application delivery and what we need to do to push out and drive actions off the back of the insights that we get, which ultimately then drives to a wider sort of customer service. So that's the sort of core of what I wanted to talk about here, in terms of data, AI, what we can do, and sort of where we go. And the other bit that I wanted to touch on was really around the future of AI. And this I'm putting out there as a sort of debating point or topic. I see lots of things from different customers that I work with across different industries, and they're at different levels of maturity in terms of their approach to AI. Some really sort of advanced, and then some sort of just starting out on the journey. But if I think about it, what happens is, traditionally, the traditional approach to machine learning is centralized. And what do I mean by that? We have source systems out at the edge, out everywhere around, in the ecosystem that generates its data. And then what we do is we then ETL it and we push it into a central warehouse or whatever to try and then make sense of that data. That's where we start to centrally sort of drive the training of the models and the algorithms on one data source. And then once trained, the model is then deployed for inferencing, yeah? And I guess that's a traditional approach. What I'm starting to see now, and in my previous role as well at HPE, was really the move from a centralized, how can we move machine learning and AI closer to the source of, where data is generated? So push it to the edge. Can we do things more real time rather than the clunkiness of an ETL, sanitize the data, having those data scientists look at things, push the models out to the edge? And what I sort of see around this is you have those multiple systems still, but rather than pushing it into the core, you push the models out to the edge and have them train together and then learn off each other. So actually it drives a collaborative way of machine learning without centralizing the training data. What you then is get different perspectives. And I link this back to the human nature. Remember what I was saying, we all have different perspectives. We all have different experiences. And how we look at this is I might learn from somebody else, but then I adopt that and then make it my own because I put it into my own way. So the model training at the edge sort of gives learn parameters. We can merge at the edge network, and the data doesn't have to move out. So that ensures privacy, and then sort of less risk around sort of data compliance and so on and so forth. And then the need for a central coordinator, so actually you get a leader of the nodes in the distributed sort of network that then sort of is dynamically elected for merging the parameters together. And just to sort of try and show this in action, you have the external data system, the source systems, where the nodes register to a distributed network and receive a machine learning model. What you then start to do is they all train individually. So there could be, if we use this as the human analogy, 5 different people sort of with 5 different views, looking at things through their own lens. And then what you do is you merge them into that leader node. And once that node gets loaded, it gets pushed back out. And then you keep repeating that process until you get to a point where your desired accuracy or insights are sort of required, yeah? This is what I see, and to be fair, I saw this in my previous company, and we're talking about it in Adobe now, how we push things out, how we get it closer to the edge, closer to the source of the data. Therefore, we can do things even quicker in more real-time sort of aspects. And so what are the ultimate outcomes of this then? You start to drive efficiencies. And the efficiencies are through saving in network bandwidth. You have the near real-time learning and inferencing. Then you drive collaborative learning. That's my point about, the power of the collective rather than the individual. So you get those different insights. That also has an impact on bias as well. So as you have multiple smaller data sets models being trained on individuals, what happens there is that the biases of the individuals come together, and then you get a more holistic view of what goes on. And what that starts to do is decentralize a network of data, generating those and secures it and aligns on it. And you can use it in a distributed ledger stroke blockchain with dynamic consortium membership. And then that opens up the art and the possible to do a load of other things. Other areas where you get sort of benefits coming out of this are reduced risk. I've mentioned this, the data privacy aspects, because the data doesn't leave the origin, so it's still there at the source systems. And then enabling data owners to monetize insights. And this is a key thing as well, because it's not just about money, it's around even the silos within organizations sometimes have different agendas. So how can you bring them together to collaborate and drive incentives to share the models from the different parameters across the enterprise? And then ultimately drive towards sort of common desired outcomes around it. Could be payments, fraud, credit risk, you name it. The sort of opportunities to go through this are all sort of there. And what I'll do, I'll finish on one final bit here, which is around, an example, say, around credit card fraud detection with regional bias. So you might have 3 different credit card networks. And if you were to do it traditionally, they would all ETL back to the central. You would train the model, you'd push it back out, you train and retrain, so on and so forth. In that distributed learning network, what you would do is you'd have the smaller data sets within each of the networks and the models learning at source, then coming together to merge the learnings. And that way, what you start to see is the different aspects of fraud that might have a number of touch points that come to one outcome, that then you can start to see the different attacks that are happening. And I think this is where, if we think about cybercrime and fraud and how it's becoming more advanced and how the criminals are sort of attacking this, they are actually splitting things out. It's almost like a divide and conquer. And whilst your eyes are on one thing, they're doing something over here. So if we can start to join the dots on all of those, then that becomes a really powerful thing. This is just a sort of concept and an example. And I know some people have been working on these sorts of things in the past, but it was really just to throw it out there and to sort of say, that's how I see things in the future. So talked about the here and now, talked about how data underpins, and sort of ultimately how we can drive the experiences in real time if we do things in a sort of particular way. Yeah. Okay. And really, that's all I had to sort of say on the on the piece. Really. Hopefully, you found it sort of insightful, prompted some sort of ideas and some thoughts, and happy to have any questions on the panel.
Yeah. Thank you very much, Phil, for taking the time. And my apologies for the stuttering video. I will fix this afterwards when we put the videos online, but unfortunately my computer crashed and I had to switch to another computer.
No, that's fine. Hey, these things happen in live, don't they? So yeah.
Yeah. But yeah, at least you can say we are real. We're not generated by an AI, because otherwise this would not happen.
Exactly.
So for the panel, this is, since you mentioned it already, I would directly hand over to Patrick, who is the master of ceremony and also like Mr. FinTech Austria. I will remove myself from the panel and put the other panelists now on board. So see you and have fun.
Yeah, thank you for all the presenters for the presentations thus far. I want to kick off with the Q&A that were missed on Philippe's presentation. There was one specific question with regards to the receipt types and the breadth of receipt types that you're receiving. What are the challenges there? And like, what are the most difficult receipt types that you have to handle?
Yeah, thanks, Patrick. I think it's a very good question, because at the beginning, you would assume that there is typically one receipt on one picture. So you would assume that employees would take one picture of one receipt. However, this is not quite reality. And to be fair, it should not be reality, because imagine sometimes you pay something with your credit card. You do get one of these proper receipts, and you get a credit card receipt. And mostly, intuitively, it's actually quite funny. People put those two receipts next to each other and take a picture of both. For us, at the beginning, this was quite a challenge, because the model first had to realize that there are two different receipts which typically have two different tables, and how to handle them. What we have done is we have actually included it now in our training set. And what we're able to do with it is we can, for instance, extract how much tip there was given, because typically the difference between the amount on the original receipt and the amount on the small credit card receipt is the tip that is on it, which is treated differently than the normal amount regularly, because the tip doesn't have VAT on and stuff like that. So for us, we used it as an advantage now for the model to make sure that it can handle not only one receipt on a picture, but also multiple receipts, and learn based on that. Did that answer the question?
I do believe only one aspect I think was left out. What are what is there a typically very difficult to process receipt, or what will you do if, for example, what also happens, people scribble notes in handwritten form on their receipts? What do you do?
So handwritten is obviously more difficult, but this is really a challenge of OCR rather than the entire model. So whatever we get out from,
we rely on the external provider.
Yeah. So if we get garbage out of the OCR, obviously it's quite difficult for the module to make a smart decision. Yeah. But so all I can say there, handwritten is typically is not such a big challenge anymore, as most better OCR technologies can also read handwritten. But there's some handwritings, there's pretty much no way that there will probably ever be able to 100% getting or even close to that, getting them right.
Gotcha. Nicolaus, I want to switch over to you. Also in your presentation, but when following your company, a big point of yours is the trustworthiness of the system and the models that you are developing. Now, first part of the question is, would you see some kind of cultural difference, I would even say, between Europe and other parts of the planet when it comes to the importance of trustworthiness? And how do you explain to your customers what it means and why a competitor software might not be as trustworthy than yours?
Yeah, so what I would say is that I realize now that it's not something that is just important in Europe, for example. We have prospect in Canada, we have prospect in Singapore, we have customer in Singapore, and we are closing the prospect really soon in Canada. And most of our customers are in Europe, in different European countries, in EU, but also in UK and Switzerland. And what we see that customers come to us because they want to have first explanation on how the model is actually taking the decision. What is different is not, I would say, regionally, but in terms of users, there are users that are technical, that are mostly the data scientists, and the data scientists want to have something which is technical and helps them understand whether the model is good. While when you focus on the end user, relationship manager, for example, what you see is that they are more interested in the result of the decision, and you need new ways also to present them the right information. And this is something that is important. But here I focus solely on explanation, and I think trustworthy is built mostly from explanation. But what we see different is that, for example, in Singapore, right now they already have set up metrics to measure how fair are the algorithm, while in Europe we are lagging a bit behind. Not DreamQuark, but I would say overall the countries. We see also that in Canada they are interested into that, while maybe in the US and in China that less something that is interesting. At the same time, in US there are a lot of discussion right now around trustworthy AI. Actually, you've seen maybe debates on the fact that some people from Google, for example, who are leaving Google because there are debates around the bias in the algorithm. There are big models that actually create unfair results, discriminatory results. There are many discussions in the US, and I think it will rise in the US. And maybe the country was less important. And I've got, for example, Chinese companies that came in my office where I presented what we were doing, and they told us, we don't care about explanation. What's important, if we say to someone, use the algorithm, they will use the algorithm. While in Europe, basically, if the company, if the registry manager doesn't want to follow the AI, he will not adopt the solution. So we have different approach. In China, you can enforce. In Europe, you need to engage. And whenever you need to engage, you need to have trustworthy AI.
Gotcha. Alex, I now want to focus my attention to your product and a little bit as well how it interacts with the current state of the market. And what I mean by that is in the human world, I know lots of bankers and investment managers who are very confused at the moment because they cannot make sense of what is going on in the market anymore. Now, obviously, without talking about any specifics, but does such a situation ever occur also in your models? Like I would think, for example, of contradicting signals. Or is it always a clear-cut story?
Yes, it's always a clear-cut story. We'll make contradicting bets, which is when we might take an oil company at the same time we buy an airline, because the AI is not sure if oil is really going to go up or down. And so to hedge itself, it'll buy what it figures to be the best in breed of both. And so every day it just creates its prediction for all. We do about 11,000 global assets, and our confidence ratio has to be high enough to make it a trade. And our confidence ratio is only high enough usually on the top even 2,000 or 3,000 globally to even be considered. So often will be the case where I guess, the nature of the system is that it'll be confused. And so that'll be the ones that, the 8,000 or 9,000 global assets that we don't have a high enough confidence ratio in to trade. And so we can only be confident enough. And sometimes that number will drop to as few as 1,800. So, these are companies that, we think it's more often than not that our prediction will be correct. And so for us, confidence ratios essential. No, there's never a time when there isn't like it always creates what it feels is the ideal portfolio. The AI just sees the market as a box, and what part of the box is the ideal part of the box to be in, the one that has the least correlation with negative factors. And so at the end of the day, really what the machine learning is doing is just trying to avoid negativity. And so, if you will, it's it adds up all of these potential negative factors before it could even really consider what can make it money. So making money is a secondary concern after dealing with risk. I mean, our company was initially, we were going to build a risk product at one point that analyze, we were just going to sell it to hedge funds. But I mean, we still do that anyway, but we also have the asset management and the research arm.
Right, but I take it that this is also an advantage of using a machine learning or AI model over like what the corresponding human do, because they cannot never get into that confused state where they say, oh, I get this signal and this signal. It's always a clear-cut story. Obviously, there must be enough confidence on the individual stock or asset that you trade, but it can never be some sort of...
Well, I think that most people who build machine learning models for trading don't base them on the global economy the way Rebellion Research has. And why is that important? It's because whatever data you've decided to predict on might become less relevant. Before we ever started managing money, we started looking at what data is relevant. Value data, growth data, momentum, economic data, what moves the markets. And so if we are going to be totally abstaining from, our own human insight, we just want to see what pushes stocks at what given times. And so we also we want humans to stay in the market, by the way, because humans are very much like most machine learning models that are built that can do very well for a bit of time, and then the thing with our system is it can never do as great as others because it's very, very, very limited. We have as many training wheels as you can imagine. And so I have these students who go to AQR, to Sigma, manage hundreds of millions to sometimes billions of dollars using machine learning on a particular data set that they have figured out a way to manipulate. But the problem is that data set might lose its predictive power in the market. And so if that data set loses its predictive power, using a machine learning to stay at the best area of the data set is irrelevant because, as Warren Buffett famously says, a low tide reveals, who's swimming without shorts. And, when, tide goes out, an economic tide goes out, of many investment styles will lose their predictiveness on the market and will do badly. Like in 2008, value became zero correlation with the market. I think value had zero correlation with the market for like 18 months to a year and a half. And then, as we all know, value underperformed for a while before its recent resurgence. Because if your economy is in contraction, which it was from basically mid-07 to basically early 09, nearly 2 years, who cares about valuations if everything is going down? I mean, yes, it's worth today, but you're going to have less dollars tomorrow. So in the end, people didn't want to buy on value. They wanted to buy on safety. And safety had no correlation with any value data. So if you had some awesome machine learning system doing 30% a year, picking the very best value stocks, and then all of a sudden value doesn't work for 2 years, your machine learning is not going to work for 2 years. Hence why it's so important to deal with a wide variety of data and to be cognizant of the fact that so much data becomes irrelevant for such a long period of time. And then will become relevant again, too. That's how it is.
Right.
So if I could...
On the topic of portfolio management, there were also 2 questions from the audience. I can read them out to you. First is, can you give more insight into what you do with reinforcement learning? Do you use it as an alternative to portfolio optimization, or do you do anything more? I can imagine the answer to that. Just quickly continuing on the second one. Also with AI, long streak of profitable trades might be due to pure luck. Basically, what statistic do you use to determine whether it was just random walk and whether you just got lucky, or whether there's really some sort of alpha or advantage in that?
Well, first of all, you have to realize everything in life is luck. From Bill Gates to Elon Musk to the best stock pickers, the person who bought Dogecoin to the person who sold Dogecoin at a penny before it went to 50 cents. There's so much luck in life. And the house always wins. Okay, in Robinhood, as we all know, most day traders lose money. 90% of day traders lose money. And so going back to George Clooney from Ocean's 11, the house always wins. And that was our approach with Rebellion Research. The house always wins. If that's the case, then you're going to lose. Your trades are going to lose. And so the only way to deal with that is to be ultra diversified, to be as absolutely safe as possible. So knowing that I'm going to put 120 trades out there and I'm going to fail on at minimum 35% of them, possibly as many as 40% of them. But if these are bad trades, what are trades that would go up if these are bad? So that's why it's important to be cognizant of your failure and diversified. And in terms of reinforcement learning, deep learning still does very, very well, by the way. We still run our deep learning portfolio, and it does very well, and it beats the S&P, but it does not beat the reinforcement learning most of the time because it doesn't pivot as well. And so it stuck with value too long last year and got hit, early on. But whereas the deep learning portfolio this year is up a ton, because our deep learning portfolio has not touched anything, because all the stuff that got killed, it then decided was all value and didn't want to sell. So it just stuck on it. And then all the values just gone nuts this year in America. In America, US value is up 16% this year. And so it's got a little bit of alpha. It's up like 18 or 19. Nevertheless, 19% this year is still fantastic. Our broad AI strategy is only up like 9 or 10. So that's reinforcement learning. But the reinforcement learning is able to jump and is much safer. And so last year when things did get bad, the reinforcement learning was able to make the portfolio much more defensive, and then ended up having a much better year than the deep learning. Reinforcement learning was up 22, deep learning was up 15. So, deep learning is slower, and it's a slower system. It doesn't pivot as well. Reinforcement learning is much more superficial. It pivots on much less information, and so it will take on more risk. It is a riskier form of predicting. And so it's really good if you're in kind of this superficial pool. But if you want to start getting some deep answers and deep questions, it's not going to do well. You have to know when to apply it. But the deep reinforcement learning for me is ideal for the stock market. But trading certain like currencies, you wouldn't want. You would just want pure, for trading currencies and commodities. Pure reinforcement learning is going to kick deep learning's butt every day, because commodities move so quickly and deep learning is slow.
Right. So I guess just coming back to the specific question, it's not just used for portfolio optimization, but also
we don't optimize. We don't. I mean, I guess we optimize a little bit, but we don't really optimize though. We kind of have like we really very much put our machine learning on training wheels, and we have a set template, and the machine learning really just fills in the dots, and so yeah. We want a portfolio that's 130% more diverse than the S&P. Pick our ideal portfolio and do that. And you can only buy one stock out of 120 below 5 billion of market cap. You can only buy and your beta can never be above 95% of the S&P. So it's very constrained, very, very, very constrained. And so we end up buying $25 to $50 billion companies, and we end up buying generally very safe businesses with 90 to 150 positive factors, including both economic and individual fundamental.
Right. Thank you very much. Sticking with the topic of investing for a little bit longer, Nicolaus, you mentioned also in your presentation that sustainable investing is getting ever more popular. It was also one of the topics that we covered in FinTech Week as a special topic. Now, I would be interested, is this just a general trend that you observe and then somehow, package into the approach how you advise the advisors on what products to recommend? Or are there any specific touch points that your model uses that come from behavioral data or something like that, that specifically cover the topic of sustainable investing? Did I phrase that question so you understood?
So from what I understand from your question, so first there are two parts in sustainable investment right now. There is one part which is knowing how sustainable are your investment. So there has been a great deal of work from asset managers looking at taking data, investigating the investments, being able to understand whether the investments they are making are sustainable, and then enforce the sustainability. So right now in Europe, for example, there is a new regulation that was put into force that ensures that data gets standardized, because one big issue right now is data that is not standardized. So if you look at different sources from different providers, you get different results from the same investment. So you can have one provider that says this investment is really sustainable, and the other one would say otherwise. And companies were really focused on that. And institutional firms were investing into sustainable assets. But now we're moving in a phase where companies have made their work. It's not perfect, but there is some work that has been done. And in 2020, for example, in France, many funds have been certified as ESG funds. So there is a label, and the Minister of Economy is looking at the firms that are investors, private equity or not only private equity, to label the funds. And companies, wealth managers, insurance are looking now to distribute funds that are certified or that have a good ESG grade. What we do is that part, the first part, to the second part. And for that, what we do is that we take data from different providers. For example, we work with Atos, where we have developed over the past 2 years a really strong partnership. We are starting to leverage data that they generate from a company that is called Yokoy, which actually generates grades on investment, which are around climate change. So they have carbon intensity scores, for example, and other scores related to climate change that give us a vision on how good is a fund, basically. And on the other side, we have customer data. And our algorithm, what it does is that it uses information on the fund, plus that extra third-party data, plus data from the customers, and it identifies that customer invest in some funds that have a better grade than the other one, and it starts providing funds that have a better grade. And what we measure is the overall change in the ESG grade of the fund, so that we improve the overall ESG grade of the fund. Am I clear?
Yeah, pretty much. So what came across is that there are various factors. One being the problem of data standardization, but that the model will continually look at the products or the portfolio that the customer has, and then try to improve the rating of the products that are in the portfolio over time.
Yeah, and one big challenge there is cold start, because if, for example, the bank never provided products that are ESG product, it's hard for the model to know that this product is interesting for the customer. So you need to really use the grade and identify products that have better grade. And also the way we approach that is that we have workflows that can combine different algorithms, different machine learning algorithms, and we also combine that with rules. Because, for example, in wealth management, you don't have only investment, but you have investments that can be made to some geographies, for example. So you have cross-border issues also. So you need really to combine rules and machine learning algorithm to have something that works. And we have a workflow builder that enables just that.
Right. Thank you very much. Phil, I want to switch over the attention to you now and ask, we now have two at least startup companies on stage. I don't know whether Rebellion still or has ever considered themselves a startup company, but there are two on stage. Also within my organization, we represent both startup companies, but also some corporate members, banks, insurance companies, etc. And what would be specifically of interest is the offering that you are building, mostly geared towards institutions and really large corporates and banks, or do you also target or already work with startup companies that pick up the platform, be it in API format or some other type of integration.
Yeah, sure. So to be fair, the predominant focus is on the larger enterprises, but we do work into the SMBs as well and the startups, depending on, obviously where they are in their journey, whether we want to invest in them, things like that. There'll be different parameters that we would look at. But really, I think you can start small or you can go large, and that's the whole sort of beauty of it in terms of, when we start looking at things and how AI is used. Really, when I look at it, is in the way that Adobe approached it, it's around the sort of total experience, really, and that's back to those 3 pillars that I mentioned in my presentation. Where I focus in my role is around the experience side of things. So that's using data that we can collect to get insights to ensure that our customers have the best experience. And we work with our customers and our customers' customers. So yes, we sort of do it across all segments, really, in terms of startup through to large corporates.
Right. So I'm not 100% sure, but for example, I would just imagine, not knowing all the details of the product, but that things like OCRing, it's probably not your specific area of focus because it's not on the experience side of things, but this would also be something that is covered within the platform. What did I get this wrong?
So we have effectively 3 what I call business units. One is creative and content. One's a digital media, and then the experience side, and they're all linked together if you think about it. And as I sort of said in my sort of presentation, that it starts with the engagement, so how you engage with your customers, and that's all around the content and the creativity. So there's aspects of AI that we've used internally to enhance our products that now we've industrialized and commercialized, that now sort of go at scale. So actually individual products and service offerings can go in, and we're one of the biggest sort of IT sort of suppliers, software suppliers around that in around the globe. So yes, we're not an OCR, but what we do look at is AI to enhance images, to enhance videos and content and sort of. So I guess a use case could be, how do we look at doing that in terms of making it readable and sort of making it more aesthetic and so on and so forth. Because OCR is basically reading the text, converting text to sort of code, really, isn't it? So.
Right. Gotcha. Thank you very much. Philippe, I can only imagine that with a product like Yokoy, there are every now and then some sort of adoption issues from the users, be it on a behavioral basis, like I don't want to use this new tool, blah, 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 but also that people are very used to digital products working 100% out of the box, right? Like we're all used to everything being smooth, etc., etc. While on the other hand, I can only imagine that it can, at this point in time, never work 100% all the time, because there is a new receipt type or because something was not picked up correctly, what have you. How do you handle these type of situations where there is a misalignment between the customer experience and what the model can provide out of the box?
Yeah, it's actually funny. User adoption is not one of our issues. People want to get their money back, so they will log into Yokoy. so it's indeed, we do have quite a good product in that sense. But you certainly have employees that use corporate credit cards only, and there we have exactly that issue, because we need to make sure that they're uploading each and every receipt for the transactions they have done. And yes, customer experience or user experience for us is a very, very, very difficult thing, because we don't really have the difference between the ones not logging in and the ones logging, because really everyone is logging in more or less. And then therefore we we have done A/B tests. We basically did what the new technologies are allowing us to do to make sure that we can see how users react. And because AI, in that sense, the end user sees only a limited part of AI. They take a picture, we read it out, we validate it, we give something back within 2 to 3 seconds. And if there is something wrong, typically they're quite forgiving. And at the beginning, there is obviously quite a learning curve, especially for the modules that work specifically for the companies, like the categorization, because every company has different categories or can have different categories. So there is a learning curve. And what I completely agree with you. At the beginning, it might be a bit frustrating because it gives me a cost center that doesn't really make sense. But that is the issue of the amount of data or the lack of data that we have at the beginning, for which we typically need some patience from the users.
Right, gotcha. Thank you very much. I also want to start with you on the closing round for that panel discussion, and I would like to ask to all of you individually, basically, the question: is there one thing, and if so, what is it that you yourself, in your vision of the future of your product, expect to come to fruition that nobody is not yet talking about? So basically, what is your one expectation of a feature or a product, what have you, that you think will enhance your product or will come in the future that we are not yet seeing on the horizon? What is your vision there?
Well, for us, it's quite easy. We want standardized receipt throughout the world, but this is something we will never get. And it's a wrong belief that would kill our business, because really that reading out of data and that OCR is exactly what you mentioned before in the question. That this is typically the frustrating part if it doesn't read out something, but all the validation, the outlier exception handling, and all of that, the fraud prevention is really where our value lies, and that's why it's truly a standardized receipt throughout the world. If I had one wish.
Well, I wasn't talking so much about wishes, but I certainly do understand the pain that you have in dealing with that. Phil, what is your one thing or one expectations or two that we might see that not many people are talking about yet?
I think, for me, the key thing is about real time. I mentioned it, and I think Alexander talked about some changes that have gone on in the past about value, and if value doesn't perform, historical analytics and behavior isn't always the best predictor of the future. So how do you bring the different views together around historical versus real time, and then spot those things? And that's where I think AI can drive a massive amount of value across a number of different use cases. And what we're doing at Adobe is trying to pull that together into what we call Journey Optimizer. So for a customer, they have a journey, they have a number of touch points. How do you sort of seamlessly bring all that together using AI and the data to start to bring those threads and stitching it? And we've got, we're launching a product around, or a service offering around this, but it's not where I would envisage it to be and where we see it going. So it's going to have features, but there's a lot more to come. And I think this is the bit, how you make use of the data and the real data that you need and the different perspectives, and then use that to do real-time orchestration and personalization at scale. And that's our vision and strategy around the experience as well, to be honest.
Gotcha. Nicolaus, what is your thing that you expect that none of us is talking about yet?
So my view is that there will be a convergence on data right now. What I see is that you do algorithm for one peculiar type of data. So you're using one model for image, you're using one model for tabular data, you're using one model on natural language, and I see a convergence of data with algorithms that can process much more different data at the same time. This is what we are going on, like, because our customers have actually different type of data. We want to combine in order to get more insight, and also in the way explanations are made right now, which are really technical. We are moving towards new type of explanation, which will need also to combine different type of data all at once. And I think this convergence of data in one single algorithm to a smarter algorithm is really key. And that's one way we are taking at DreamQuark.
Gotcha. Thank you very much. Last but not least, Alex, what is your one thing that you believe will happen that is not on the horizon yet?
Well, I'm not sure if I understand the question, because natural language processing, we haven't incorporated it in our program, but I think it will make our system better. I anticipate coming up eventually with a natural language processing implementation or addition to our system to make our portfolios better. But NLP is very much on the horizon. So what's not on the horizon, so like what could be out there in 5-10 years? I don't have a good answer to that.
You don't need to. It was a very open question, but no, or I don't know is equally good answer.
No, I don't know. I know 5G will definitely create a lot of wealth and amazing companies, the way Uber was created because of 4G. So, but 5G is also something everyone knows it's on the horizon. So it's hard. Whatever I think won't be on the horizon ends up, it's hard to know what'll be the next tomorrow. But great question. It's a great question, I'll tell you that, because I deal with a lot of questions in my days, and that one definitely kind of stumps me.
Sorry, could I just add to that? Because outside of what I see holistically, so this isn't Adobe, this is Phil Starrett and what I see. And I think to Alexander's point, there's a whole number of different things that are starting to come together. From 5G to AI to AR to VR, and they're sort of things that are starting to come. And I think what I would like to see is people talk about ethical AI in the future, and that's on the horizon. We're trying to put boundaries around it. But how do you bring almost a sentient being, i.e., self-thinking? That for me, because everything at the moment is programmed. So it is a bit of NLP. It's a bit of neural networks. It's a bit of machine learning, whether that's reinforced, supervised, or unsupervised. How that comes together and do that in a way to drive, as an example, the pandemic. Could that be something then that we would have got the insights quicker, we would have got the access to the data quicker, and therefore we would have been able to do things more proactively, or even amazing job in getting the vaccinations out, but could that have been done quicker? Those are the sorts of things where I think where technology can do things for the good, and it's all of the things coming together.
Right. With that, I would like to thank you very much again for your time and participation. Thank you, and I'm handing back over to Clemens.
Thank you.
Thank you so much, Patrick, for moderating this great panel. I jump in for Clemens, Matthias Grabner here from the Thank you, Nicolaus, and thank you everybody for being part of this panel. And we are not done yet, and thank you everybody for sticking with us on this interesting day of the Vienna Up Festival, the FinTech in AI, Applied AI in FinTech conference. Patrick, we have something more planned, and right now I would be very pleased to welcome Karina and Alex Zehentner, and let's see if they are online and if they can hear.
Hi.
Hello, Karina and Alex. You are unmuted.
Hi. Hey.
Right.
You should hear us now. Can you hear us?
We can hear you loud and clearly. Yes.
Perfect. So we will
once
share our
again
screen.
during the panel. As you know, this is all live. We broadcast on LinkedIn and on YouTube. Please ask your questions to Karina and Alex. And you have prepared some slides, right?
Right. Yeah.
Wonderful. Let's try and see if you can share them with us.
Yes, I'm trying. One second.
Karina and Alex Ziertmeier, founders
Can
of
you see?
Textastic. And Patrick, I get you off the panel for a second and hand over the stage to Karina and Alex Ziertmeier from Textastic. And here we have your slides.
Perfect. Amazing.
And we see each other in a couple of minutes. The stage is yours.
Thank you so much. Thank you, Matthias. Thank you for having us. Good afternoon, everyone. Thank you for sticking around. So we are Textastic, and actually just to give you a bit of a background where we started our journey, we are a young, early stage fintech startup here in Austria. And actually we found out that every year, billions of euros in tax refunds go unclaimed across the EU. Only in Austria, in 2015, it was 300 million euros that were not reclaimed of too much paid tax money. This means actually that on average in Germany, people are refraining from getting back 1,000 euros and in Austria, 560 euros. So why that? Very easy. Tax rules are complex. Very often there is a certain lack of know-how and a fear of making mistakes, and the entry barriers are very high. And this is why we originally founded Textastic. And we have this vision that actually with Textastic, the only thing a taxpayer has to do is to enter his or her personal information in our application and then start collecting receipts. And the rest is done by us. How? With natural language processing technology, as was discussed beforehand as well. So basically what we are doing is we are not only reading out receipts, but we come in afterwards where we are really understanding the products in a receipt and then connecting it with the individual situation of the taxpayer and then analyzing whether this expense has a tax relevancy and categorize the expense accordingly. What this means, I will tell you in a second. For this project, we have also received a funding from the Austrian Wirtschaftsservice, a trustworthy AI funding we are very proud of because we have a very strong explainability mechanism and also a system of keeping the human in the loop and in control of the decision-making process. So to recap what this means, what we are doing is, so imagine you are a chef de cuisine and you are buying a cooking book. Our algorithm should realize that a book called, for example, 99 Recipes for Summer is actually a cooking book, connect this information with your profession, and then suggest to classify it in literature. That's where we actually sum up all the expenses in the different categories. So as you can see, I'm mostly talking about the employee tax situation and tax refund. And the first use case of our algorithm, which is now in development, is our already existing Tax at Home app, which has more than 35,000 downloads in Austria and Germany, and is currently very manual. So you can use it to collect receipts and to do your tax declaration. It's directly linked to Finanz Online. And also in Germany, you can export your reports to your tax consultant. And we will launch our algorithm there in the course of the end of this year. And so that people can actually really get started using it in a freemium model from next year. However, our vision goes way beyond. So on the one hand, we dream of one completely integrated system where from a banking account, basically like from various applications where you have the expenses going out, receipts are matched automatically, and then classified already in direction for your tax refund. And in the next step, also in a B2B case. That we have some B2B traction was proven by our first paying customer, BDO Austria, who is currently involved in our development. So our next steps and plans that we are having is that our algorithm should then be extended to other services or other tax incomes actually, such as the rental income tax and freelancers. And especially for the freelancers, we plan to have a big benefit, since this would really be great, like having the bank accounts matched with receipts and then going directly into the accounting. And from then, we are also planning to extend to other European countries. Who are we? So we are currently a team of 7. I'm missing one of our team members. Carl is our CFO and has been a tax consultant for over 10 years. Stefan is a TU Graz professor and has been developing tax applications for over 5 years. Alexander, who is here today, my brother, is our CTO and machine learning engineer, and also Jonas and Bart are machine learning engineers. I myself, I'm a lawyer, and I'm in charge of the business here. So, and with this, I would hand over to Alex, who will give you some lessons from a very early stage AI startup trying to deploy AI in the fintech world.
All right, thanks, Karina, for this fantastic pitch. Thanks, Applied AI Conference, Clemens and Matthias for having us. Yeah, so I want to show you today the learnings we had in the last year about how we develop artificial intelligence right now, but it was a long way to go there since we came to this point where we develop artificial intelligence in this professional manner. So first of all, the first very big learning, which is also really big in the community now, is building the model is a lot of fun, but is only a very tiny step in the whole process. So there is so much more to it, and we initially didn't know that. I think most people don't know this initially, but there is also this whole, like lately Andrew Ng had like his fantastic talk where he basically talks that we should come from this model-centric point of view to this data-centric point of view. Most of you might already have heard about that, and this we can totally agree with. The first time when we were starting, we had our focus way too much on the models, which are, as Andrew Ng says it, really easy to replace because there's every 2 months a new model coming. And if you fine-tune your model, the newer model might be even in a general case better than the fine-tuned model you have. And the thing that is kind of always the same is the data. Not completely, because we live in a complex world and the data is changing over time, but the models are definitely changing more than the data that is coming in. So I think it really makes sense to focus on the data. I think this is the learning number 1 here. And the first time I heard about it was actually from the fantastic book Machine Learning from Idea to Production from Emanuel Ameisen. And this is really a fantastic book. And how he stated it already like 1.5 years ago when I read it was that was basically, he said he wrote a sentence that still sticks into my head, and it basically says, there's a reason why data scientists are called data scientists and not algorithmic scientists. So he already back then had this idea and figured out that this is actually the case. Like, we are focusing way too much on the model point of view and way too less on the data point of view, even though it is called data scientist. Highly recommended book, also for business leaders and for people who might not have a really technical understanding in the field. The next thing is, use APIs, do not reinvent the wheel. And so basically, I think everybody is doing this problem, is having this problem at one point. You're developing something and it is already existing. And I agree, but sometimes we figured out sometimes it's better to actually do reinvent the wheel. But for most of the times, it's better to not reinvent the wheel. And what am I talking about? So there's a lot of really great APIs out there, but sometimes you might not find the exact match for the problem you try to solve. So you have to kind of, there is just not a perfect solution out there right out the way, right? This is why we are doing machine learning and doing all this, try to solve these problems. And so sometimes you just have to be creative, and you might figure out that you actually have the skills to write your own API. And as a startup, if you're a startup, you might, if nobody else has built something similar like this before, you have an additional revenue stream. So this is our learning number two. Could have, like if it's working. So this is our learning of number two, like use APIs as much as possible, but there might be APIs that are not a perfect fit for your problem. So you might be better off to adjust it directly and build it up from scratch. Even it's like getting you away from your final goal a bit, but you have an additional revenue stream if you manage to solve this problem simply by packing it into an additional REST API. Number three is too less data. There's this misbelief that you actually need a lot of data. I actually do kind of a bit of disagree, because we have this crazy hive mind called internet, and I'm not necessarily saying we should like scrap the World Wide Web illegally. I'm also not necessarily saying we should not scrap the web, but there's also like really great legal ways, like Microsoft Bing search, Microsoft Bing image search, and other search engine APIs that are really great for maybe if you do have, sometimes you just do have too less information in one specific feature. So just use the web, like try to get more information out of the World Wide Web. I think this is a learning we can say as well is really important and helped us solving some problems. The next step is again an idea from that helped us from Emanuel Ameisen from his book Machine Learning from Idea to Deployment. And it's actually start with heuristics and get the first pipeline running up really fast, so that you don't get stuck in details, and that you from the beginning start thinking into kind of systems. So you really, sometimes, so you have to break your problem down into heuristics and then sub-problems, and then you solve these sub-problems with heuristics, and you will figure out most of these heuristics might not work really well. And that's exactly why we do machine learning instead of this rule-based heuristic kind of programming. But also, first of all, for some parts, you might figure out these heuristics work better than expected. We had this learning that we were really surprised for some problems, for some sub-problems of problems we had, regular expressions and old school dynamic programming brought us way further than we would have ever expected. And we could say, like, actually, for this sub-problem, we don't need machine learning at all. We use heuristics and different tools for this sub-problem. And and then we immediately saw, okay, where is the bottlenecks? Which heuristics are doing not so good and not so well? And then we could concentrate on these ones first and convert these into machine learning problems first. So I think this is a real game changer in thinking, like getting the first pipeline up and running really fast, and then work on the bottlenecks. What is the slowest? What is the worst? Kind of metric, whatever. The next advice is active learning. I think this is such a powerful tool, and it's so simple, but I have the feeling like most companies out there actually don't do it, and we also didn't do it. Until we did. And now we're really happy that we're doing it. And it's basically, so I'm not sure, like I explain active learning really fast because it's a really simple concept, but the idea is, I start explaining passive learning. Like what most people do is like, okay, passive learning, we have a problem, we want to solve it, we use machine learning. So what are we doing? What is the first step? We need a lot of data. And then the whole company is collecting data for like from India, in-house, like everybody's labeling like crazy, solving it in a supervised fashion. And after 5 months, you have like this huge database. You cannot even fit in your RAM because it's so huge. And you train your model for weeks on this whole data, and then you figure out it doesn't work. And for active learning, it's exactly, it might work, maybe it works, most likely not, because you have some problems inside there. And active learning is the exact opposite. So you're like not collecting a lot of data, you're not outsourcing to India and collect more and more data. It's like you start with collecting, let's say if you have a classification problem, you start with collecting 100 data points per category. And you keep the model in the loop and you immediately pre-process the data, feed the model, and you will see, it might not work, but it's also not a problem at all because you might have just lost 1 or 2 weeks of time labeling, and you immediately have the feedback of like, it's a classification problem. So we look at the confusion matrix, smart as we are, and then we see, okay, actually on 2 of these 4 categories, even with this very little data, it's already doing pretty well. And then you're actively collecting and cleaning the data where the model is having a really hard time and is having problems identifying. And then you collect like 100 new data points for these classes and clean the data points you already have. And then you do this again and again and again in an iterative manner or in an iterative fashion. And this is a way more powerful than trying to collect all this data up front. And another concept that is, I think I'm already over time, really short to this one point still, is transfer learning. It goes really well together with active learning, but not necessarily. And it's actually like using since startups have really problems with the amount of data they have, transfer learning is a really amazing tool. So you use these huge open source models, Google or all the other big companies have already trained their awesome huge neural networks, and you take all this information that is encoded in these huge neural networks, these weights, you download them, and you just cut the last few layers away and train these last few layers for your specific downstream task you want to solve. So yeah, and this is reducing the computing power and the data again. So yeah, I still have another slide, but since
I think you can.
Okay. Okay, so like, yeah, one more thing. The last learning we had is actually get the machine learning engineers involved. I think it's really important that machine learning engineers are not just developing this really small tiny part of a model. They have to be involved in the whole data circle somehow, and especially in collecting the data and labeling the data, and in the ways they communicate with. They have to be involved in the communication with the domain experts. There has been like, especially from DeepMind and from these huge companies, there have been success stories where people had no idea at all about their domain, and they managed to outperform human expert groups. But this is really, I think this is really unique for companies that have, first of all, a lot of computing power and a lot of data, which we startups do not have. So yeah, that was how we do machine learning and AI at Textastic. Thanks for your attention, and yeah.
And we forgot the call to action slide, but this would be, so if you think that's very interesting, then connect to us and talk to us. And we're looking forward to your questions, and happy to also look into joint projects.
Yeah.
Thanks.
And write to us on Twitter or LinkedIn.
Yeah.
Exactly.
So
and I trust your contact details are in the slides. Thank you so much, Karina and Alex, and maybe to all our viewers who wondered why they are sitting so close and breaking all the COVID rules. They're actually brother and sister, just to repeat it again. Very interesting presentation. And maybe Patrick and Clemens, we have one question that looks pretty long. So let's try and see if we can actually display that question here.
Whoa.
Wow, okay. There are different approaches. For example, Google's approach to decentralized is to train the models at the edge, and then learned parameters are sent to the core for merging. HPE are utilizing blockchain to manage the network, register the nodes, and then learned parameters are merged at the edge, whereby a leader was dynamically elected for merging the parameters. This could be a different node each time, and parameters are set as triggers to merge and update the merged parameters. Is this a question?
I'm here with a machine learning engineer.
For me, this really sounds like kind of a kind of federated learning, like that like taking care of the privacy data and calculating the gradients on the device, and then only sending the gradients to the cloud where the model is training instead of the complete data. So I don't really see like a question in this whole thing, but I think if this is advice, it would be good advice.
We have discussed this actually at some point. Yeah.
Roman, if you have any more input, then please let us know. We are live right now. And Patrick and Clemens, did any more questions pop up at your end?
Nope, not as far as I can see. Flipping through the feed.
Perfect.
So it was very clear.
Yeah, must have been a great feed.
Mission accomplished.
Yeah, exactly.
On the Friday afternoon, so.
Yeah, I enjoyed your call to action in the last slides a lot. So please get in touch with Karina and Alex directly if you are a company considering going into that direction and wonder about what the best approach is.
Exactly, and we will also put the videos. We will cut the videos. We will put them online, and also write the details how to get in touch with them inside.
Yeah, sorry.
Through the video, it might be a bit difficult.
Perfect.
Perfect.
Excellent. Yeah, really. Thanks a lot, and yeah, looking forward to present you at the next year's FinTech Week already as a unicorn. Who knows?
We are very excited about being there as a unicorn then. Yeah.
Patrick's unicorn stable.
Thank you so much for having us, and yeah, we were very excited to contribute and be here. And
absolutely. Thanks for the invitation. Yeah.
Yeah. Thank you. Bye.
Thanks. Bye. Bye.
Thank you. Bye-bye.
Well. This brings us to the end of this year's AI and FinTech event. Of course, there's always a number of additional events especially me and Matthias, would like to preview, but perhaps we hand over the phone for a brief time to Patrick for some famous last closing words.
Yes.
Yeah. So first of all, again, thanks for hosting this event. I think overall during the week, we've had quite a number of events with diversified content, international participation, and yeah, I think that specifically captured the spirit of what FinTech Week is trying to achieve, to bring together the community. In that sense, we're quite happy, and see you next time.
Yeah, thank you for that. We're also looking forward to perhaps have next year's event again offline, or at least in a hybrid format. So let's see what happens. Cool.
Somebody asked just one thing. Somebody asked a question. Maybe Roman. This question for a panel already finished, but it came in right now. You can rewatch the whole recording on LinkedIn. And right. Okay. Thank you so much. And
I think he's not watching live. That's the problem.
No, he's not watching live, but he will. He will find out in about 1 hour. So, without further ado, I hope to see many of you at the next conference that Clemens and I are working on right now, including you, Patrick. The next big, large applied AI conference from May 25 to May 28th. We already have over 700 registered participants from all over the world, exclusively from businesses, AI solution developers and AI users. and check it out. Registry is open and free. Good.
Exactly. And in June, there will be another event. This will be the last one before summer. It's about applied AI in semiconductors. So on the one hand side, that you use AI for semiconductor design, testing, and so on. And the other one, how do chips look like, or specific circuits made to accelerate all this type of AI algorithms that you heard before today, like NLP, computer vision, reinforcement learning, and so on. So this one will take place on June 17th and 18th, again, in an online setting. So just follow us on the AAIC LinkedIn to stay up to date on this one. So with this, many thanks for tuning in. And for those of us that are watching the recording, thank you very much for watching the recording. No more live questions. And have a nice weekend. Looking forward to the next events. Bye-bye.
Bye.